Okay, guys, good morning. We are early on purpose. I actually was going to start this a half an hour ago, but I realized many of you would still be in bed. I know my sound's working. Do you guys see my process? Anybody? Thank you. I have some real good stuff to do this morning, but like I said, I'm a few minutes early, so I'm not going to start until we get some more folks here. But I'm really excited about doing this topic that I'm calling an audible to. I'm doing a slightly different topic than I had intended. But after reading all the comments in the Slack, I am quite certain this will be useful. Oh, how funny is this? I was playing this exact same trade. But I wasn't doing it as a spring, Phil. If you're here yet, let's see. I don't see you. No, you're not. Well, you'll hear it in the recording. Anyway, I was doing it as a range, which is interesting. I didn't even look at the chart for a spring, but let's see. Yep, there was a spring there too, right there. All right, I'm just babbling, guys, waiting for people to roll in because I started early. So if you're just rolling in, that's what's going on. We are going to start promptly at 6 o'clock, though, so that is in 5 minutes. I have a lot of stuff to do, and I should have scheduled this earlier, but I wanted to get some sleep. Good morning. We're going to actually start at 6, so we have a few minutes. I opened the room early because I wanted to. If there were enough people here, I was going to talk about something else till we got started, but I'm going to just wait till we all get here. So if you need to get your coffee or go to the bathroom or go take a quick shower or whatever, we're starting in 4 minutes. Yeah, I just redid mine. I have 3 different coffee machines. I have a Keurig 1 cup for when I just can't wait. And I think they're horrible and not eco-friendly, but they're convenient. And then I have one of those grind and brew ones where everything's all in one, which makes just ridiculously good coffee. But then you got to clean it, which is a hassle. And I don't believe in hiring people to do that anymore. I used to think that was the answer to that. Anyway, so yeah, coffee is important. All right, we are starting in 3 more minutes. Oh, this gold trade is really pissing me off. I had a beautiful gold trade on and I had to stop out of it. Oh well, I'll tell you about that once everyone gets here. I was long down here at 69, right at the bottom of this bulge. And had an error come that I have done over and over again in this particular setup, and I have yet to figure out the optimal specs for it, but that's a topic I'm going to talk about. So once we get started, 3 more minutes, guys. Get your coffee, do whatever you need to do. I'm just babbling till actually 6 o'clock, and I will start right on time today. While I'm waiting to start, I see Lee is here. I don't know if you're listening at the moment, Lee, but I was looking at the comments about, gosh, where was that? Was that an emoji? Yeah, the MBO data. And I just wanted to mention real quickly for anybody that might have seen that, that's probably a couple of orders of magnitude above the level we're talking about stuff at. I would encourage most of you to ignore that for now, but there is some really interesting stuff you can do with that. Hard to find an edge with the MBO data, and you can't do it with Ninja. You need a different platform that can do it. But I like the topic. I just want to keep it confined to this thread. And for the rest of you that don't know what it is, rather than going and learning what it is, I would suggest at this point in time that you just forget it. It's not something that you can learn quickly or that you'll be able to adopt quickly. Good, Lee, thank you. And that's a big piece of the topic today that we're going to talk about, is just there are so many degrees of sophistication in trading, and some of them require training and experience that all of you, with two exceptions, don't have. So what I want to do once we actually start here is give you a methodology for navigating that. In other words, I've talked over and over about this as a business and you have to approach it that way, but then it occurs to me that the vast majority of you have never run a business, so you don't really have that experience. So that's where we're going to start. But again, the way to frame this MBO thing before I get started, this is a really sophisticated order flow tool that requires platforms that can manage it. And even among the people that do it, who are mostly quants and algo type traders, it's really hard to find edges because you're dealing with such specific data. So it's really, really important to understand what you don't know and your level of competence. And something like that requires a reasonable degree of sophistication. Okay, 1 minute. Let's go ahead and start the real webinar or meeting. If you're just walking in here, I've just been babbling about another topic that you can go back and listen to, but it's not relevant to the webinar at the moment. What is going to be relevant is, I want to do two things here real quick. First of all, the topic of this, trading the open, putting it all together, and these other setups. I'm going to focus mostly today on putting it all together. I'm not going to do any opening trades unless something just really looks interesting. And we may or may not get to these other setups again because, and this is the actual topic I want to talk about. I realize that there's a lot of skills that one has to have to really do this well. And I went back over my notes of teaching and mentoring for like the last 20 years. And I realize people that I've taught at this level, in other words, really one-on-one with a small group, 50 or less at any one time, that's kind of my model. Of those people, and the total is just under 1,000, it's like 700 and something, and then there's a few that I'm not sure I should include. And if I take all those numbers and I put them all together and I look at the experiences of those people, most of them are fairly conventional. They have a profession, they've done that one profession. A number of you have been teachers, for example, or which is actually a really good profession to come into as a trader, and I'll explain that in a minute. But for example, if you're a pharmacist, like Darren, has a really analytical mind, and that's really useful in lots of this. But some parts of that, that kind of training are actually going to work against you. And then, if you look at people that have just had, hourly jobs, or some of our young folks who are just getting into the workforce in this group, I realize that, it's easy for me to say that, you got to think about this as a business, you got to manage it like a business, but the vast majority of you really don't have an idea how to approach that. So I'm going to talk about that, and I'm going to talk about it in a way that I always find useful, which is by use of example. And so this is a session that, please answer or ask questions in the chat, and I will unmute you if it's something you have to use voice for. But I really want you to try to take a step back from just indicators and setups and all that. And, we'll kind of watch what's going on here. And if something really interesting happens, I'll come back to it. But, and I'm also going to give you a 2-second thing about some prep right before we get to the open of the New York in 30 minutes. But before that, I want to stay on this topic. So number one, making your life synchronize with your trading and doing that around whatever life you have, kids, infants, pregnant wives, there's all kinds of things I hear from you guys, 2 or 3 jobs. In my case, being a caregiver for someone with Alzheimer's, we all have all this stuff going on. And it's real easy to have that interfere and not realize it's interfering. And, I've talked a lot about building processes. and how important that is, and how approaching this like a business is so important. But I haven't really given you guys a framework beyond the idea of building a process how to do that. And I think that's important. So that's what I'm going to do. Okay. And again, this is going to be by example. So it's not going to be linear. Hey, you know, most people would love to have their own business. And the first time they try it, they realize how much they don't know. There's so many different factors. I mean, just think about it for a second. You know, you have to understand accounting to keep your books, and personnel management, and human resources to hire people, and customer service to deal with your clients, and sales skills to sell your product or service or whatever it is your business does. And that's a lot of different skills. And so to just say, well, you got to make your trading a business, and, you know, have somebody that, you know, has had a regular job with an employer grasp what that means, you know, it's a push, because a job and a business are very, very different. I mean, think about it. No matter what a job is, you know, even as high up as being, you know, you're a physician working for an HMO, you know, you work for Kaiser, for example, in the United States. Let's just say that, and you're making $200,000 or $300,000 a year. It's still a job. Somebody tells you when to be there, and you have responsibilities, and you report to people. And the point I'm making is that it has a very defined structure. And yeah, Amy, this totally occurred to me based on some emails I got, and that's exactly why we're doing it. So if you're just jumping in here, I started a little early, and I'm kind of segueing into this topic, which is, you know, this whole process stuff is really important, but the outside framework for that, which is building a business and understanding how to manage your trading like a business, is something that just the vast majority of you don't have experience with. So I want to stay on that. Okay. So let's go back to this jobs versus business thing for a minute. You know, when you have a job, somebody tells you what to do, and then you get compensated for that. And yeah, you know, depending on the job, you might have more freedom to choose your task by task, or in some jobs, you have no freedom whatsoever. If you've ever worked retail, for example, you know, that's a nightmare. You don't know your schedule. You don't know when your next schedule is going to be. You get sent home early. You don't have money that you thought you were going to have. You know, you get, in a lot of states, you work overtime and you don't get paid for it if, quote unquote, they have a, whatever those stupid laws are called, right to work, which are the exact opposite. But anyway, you get where I'm going here. You know, your life is kind of run for you. And trading is so different from that. And it's much more like the other model, which is running your own business. And let's just take a simple one. You know, let's say you have a business washing windows, okay? And I actually, this is a live example, and it's a good one. I had a house in Palm Springs a couple of decades ago. I used to vacation down there, and it's a desert, you know, resort community. And there's blowing sand all the time. So the windows are filthy, and window cleaning businesses are popular. And one time I met this guy, and he was a recovering heroin addict, and he had an old beat up pickup truck, and he and his wife were cleaning windows, and they were living out of the truck. I kid you not. That's literally what was going on. And I met this guy and thought the least I could do is have him clean my windows. So I hired him to do that. And then I started watching him and talking to him, and I realized, you know, the guy, he had a very interesting background I won't bore you with, but he really had the right idea. He was doing everything right, but he just had no idea where you go from there. You know, he was busy all the time. He was making enough money to survive, but he had no idea how to grow this thing. So anyway, over a cup of coffee outside one night, we talked a little bit, and I just kind of gave him some structure on how, you know, how to hire people and how to grow something like that. Anyway, long story short, the guy, that was all the advice I ever gave him. He figured it out on his own. And I saw him a couple of years later. He came by to give me some literature. Anyway, he had 5 trucks with a crew of 10, and he was doing 7 figures cleaning windows. I mean, this blew my mind. But it illustrated to me the difference between having something that is a good business and can make money. And the example here over in trading would be a setup. So for example, you know, the easy one we all love is HMOMO on really volatile days. You know, just get in there, or the open on, you know, HMOMO at the open. Because, you know, it's really hard to do that wrong. You know, you get the trade open, you get your stop in, and you let it rip. And then it's just a matter of management. So, you know how to make money that one way, and you can fairly consistently do that. So you're my, you know, recovering heroin addict window washer. But what it's really hard to understand is how to scale that. In trading would be, okay, You know, how can I do that with 10 lots? You know, if I consistently do it with one, I ought to be able to do it with 10. You know, the math says it's just a matter of multiplying by 10, but it's not that simple because you have to manage risk. And the guy washing windows has different risks. So that's a really one simple example, and I don't want to really waste time on it beyond that, but I think you're getting the idea. Building a setup just gives you an income stream, but the business itself is a lot more than that. You know, your platform, your data feeds, your brokers, your commission rates, you know, that's like a cost of doing business. It's almost like paying rent, right? And so these are all things that are really important to consider along the way. And I think a business plan channel does make some sense, and I will do that. Let me write myself a note to do that, Amy. And anyway, before I go into some more examples, I want to just stop here and see if this is making some sense to you guys. No, they don't have to be 30 pages. A trading business plan should be a one sheet. And I did one this morning just as an example. I'll share with you in a second. Yeah, the military is a really good example. Where not only do you immediately just, you know, someone says jump, you say how high, you are trained to not even consider why. And that works really well in the military when you need that. But in a business, or if you're the colonel commanding that group of soldiers, you can't think that way. You have to be a little more analytical because you're expected to be responsible for them beyond just taking orders. And, you know, as a middle military officer, that's a really challenging thing, just like it is as a middle manager, you know, a director or a general manager in a business who reports to the board or to the CEO, you know, like a colonel might report to a, you know, low admiral, general, whatever, you know, service you want to be in. Anyway, you get my point. You know, the higher up you go, the more authority and decision making you have. So when you're trading, the lowest level is the setup, and the highest level is managing your entire account. And one of the things about Top Step that I love is they sort of do that for you, but they don't really teach you how to do it along the way unless you do some mentoring with somebody. So let's stay on examples of that for a few more minutes. And again, some of this is going to sound like it's not on the same topic, but it is. Just trust me on that. It will loop back in. Linda Radsky, many of you know her. She's a really famous trader and really successful one. She's one of the most successful females ever in trading. And anyway, if look her up, she had a tweet this morning that I retweeted. That's what I'm looking for right now, just because that way you can find her fast. Okay, did it retweet? Thought I retweeted it. Oh, you know what? I just liked it. That's what it was. Okay. Anyway, search out Linda and follow her, and her educational material is really good. So anyway, so Linda told a story to a couple of people once. This was actually at a meeting at Top Step that I was at back when they were just getting started, and I flew up there and they had a couple of different experienced traders doing these little presentations. And Linda got up there and she did this one, and it was so relevant. And I was watching the reactions around the room, and I could just tell that about half of them had no idea what she was talking about. People got up and went to get coffee, and other people were just riveted by it. So let me dip into what she said. Now, this is a woman who's run multi-billion-dollar hedge funds. She's been really successful. She started on the floor of the Pacific Stock Exchange. She traded options. You know, she's a world-class trader, top 1% of 1%, okay? So she gets up in front of this group of aspiring and successful people at Top Step, and she says, okay, what I'm going to explain to you today is the importance of acronyms. And an acronym, you know, is like FUBAR or FUBAR, you know, fucked up beyond all recognition, or, you know, it's a way of taking a thought and putting it into a memorable couple of letters. Okay, that's an acronym. So she told a story about how she loves to prep at night, and she's married to another trader who's also very successful. And she said that, you know, the problem we have is since we're both doing this and we kind of do it on our own process on our own time, it's really hard to find when we can sync up. And I'm sure those of you that are in relationships without not being with another trader, it's hard enough. But imagine doing it with another trader with how erratic that is, one who's trading a different system than you are. So she said, what we've done is we establish rules, and we use acronyms to do them. And I do this all the time, and it's really, really a great way to build up a step from your setups to the next level up, which is kind of how do I aggregate setups into a business? And here's one simple example of that. What she said was, routinely she would find that if they went past a certain time at night and her husband and her were both working, that it affected their relationship and it ultimately affected her trading. So she made a rule with her husband that at 10 o'clock the power goes off. So any device that requires power cannot be used. That includes the television, that includes tablets, that includes phones, computers. So it's really hard to prep for trading if you can't connect anything. And so they set this rule and they enforced it. And that's a really good example. And she made an acronym for it, which I won't bother, but it was something like the Queen's lights go out at 10 or something, and she abbreviated that. But the point is, that was a really significant element of her business that really didn't have anything to do with a particular setup, but it did have a really important impact on her happiness and her profitability and her ability to even stay in a business. Now, she's much farther down the road than we all are, but many of you are at this, okay, you know, and God, at least a dozen of you shared something like this, that, you know, I can make $100 a day or a couple $100, and that's my goal. I just want to slowly grow my account. But the problem I run into is, you know, once every 2 weeks or 2 months or whatever, I have a massive drawdown and I'm screwed. Okay, that's a flaw in your model somewhere, and you need to identify that, but it's actually much more than that, because you really need to think about the big business itself. Okay, and that's why, you know, what is your long-term goal? Does that have a test of reasonableness? So for example, that one's really good because you can build your capital really consistently, but you have to have a really ironclad rule. If you're going to do that, you cannot lose any significant money. So an example of a way to deal with that would be to create, and again, this isn't really part of your process, it's just part of your business thinking. And what you could do is you could say, okay, there's just some absolute circuit breaker for me, and you have to figure out how that makes sense. And here's a really good example of a real-time version of that for me. And I know this sounds convoluted. Hopefully it's going to loop around in a minute. Okay, this morning I was doing a gold trade. Gold was trading down here, 69.9, 70.0. It's right in here, and it was the perfect bottom, the edge of this range. When we got down there, there was a lot of interest. There was a lot of orders coming up, and the order flow was looking pretty good, like we were going to get some buyers and get a bounce. And let me see if I can find it on this tick chart. It was, okay, yeah, it was right about in here. So we were coming down in here, and it was right around in this area. I started nibbling. I think that's, wait a minute, hold on 1 second. Yeah, this is why charts aren't very good, particularly this fast, or yeah, this fast. Give me a second. I want to give this some context. I remember it because, you know, I just did it, but let me just see if I can get a chart where you'll be able to see it. Okay, yeah, this is it right here. Okay, so basically this consolidation was going on most of the night. And then we came in here and we sold down, and it looked like there was going to be pretty good support there. So basically I was starting to buy into this in here, right in this consolidation. And it shook me out right here, and then it did perfectly what I wanted it to. So what happened in this trade, and I'll go back to the dome to be a little more clear, but right about in here, I started getting long. I think I put on a couple here, and then right in here, I added to it, and you can see why. And I think at this point, I had 5 long, okay? And then we got this sudden, really aggressive move down. I, you know, told you how I handle those. I get out, and as soon as I did that, it went my way. And this has happened to me a bunch of times in gold. And I think I mentioned this a few times in other sessions. And this has been something that, let me just show you here real quickly. So it was right down in here that I was buying. It was the perfect bottom of this. And the only danger was this kind of empty area to the next bulge down. And that's why I let myself stop out of it. So anyway, this has happened with my gold trades overnight. It's happened with the range trades. No matter how I applied my existing setups to gold, this seems to happen. And so this is a really good, you know, business process development. I allowed myself to lose $500 on that. If I had stayed in the trade, So it went minus 500. That was as far as it went, because of course it reversed right then. If I had let myself stay in that trade and just come up to the place I was looking to exit it, I was looking to start exiting at like 75, 74 right in here, because that was the kind of center of that range at the time. But if it had this kind of energy, I obviously would have kept a couple of them. Anyway, long story short, this happened to me over and over again, and it's the same problem. I define the range really well, and then I get what looks like a good trade. I add to what is a winner, and then I get popped out of it. Okay. And you know what the problem there is? It's a complicated one, because given all of the things you've heard me say before, it looks like that I'm entering a trade, it's winning, I'm scaling into it, and then I'm getting shaken out of it. And it shouldn't work that way if it's going to be a setup that I can use over time. So I started thinking, all right, my reaction as a rookie would have been, well, there's some algorithm in there that that I'm just not understanding its behavior properly. And no, wrong answer. Okay. But there could certainly be some algorithms doing stuff, and over time I'll kind of learn the behavior. But you know what the short, really sweet answer to this is? Does anybody know? There is a way to solve this right now, and then to let the experience base and the knowledge base build. New method? No, because remember what I've been saying. Okay, I said I get the range right, and then I have a winning setup and I scale into it, which is how I play ranges, right? And then I get shaken out, and then almost immediately it goes my way. So this particular trade, yeah, okay, so we're getting on the right track. Be more, no, okay. Um, you guys are all really close, but see how you're thinking. You're thinking correctly. It's a simple answer. Amy, you're on the right track. It's more room and it's less size, okay? For some reason in gold, the idea that a range preserves and then adding size to it, okay, I'm going to explain in a second, okay? The problem with that is that it forces me to be in a position where I have to get out or not if it starts to go against me from that initial going my own way. However, go back to that trade again. And if I look at every single one of those examples, and I've done this, I did this morning, okay? There's about 30 of them that I've done over the last 2 months. If I go to every one of them and I just take out the second step that I normally do in my range trades, remember, my range trades are typically scalps, they fall in there, define the range, but this problem occurs over and over again. It's called too big. Because think about it, if I had done that exact same setup, but I had not scaled into the winner and just let the setup ride with the opening size, every single one of those trades would have been profitable. Every single one of them. Yes, with CL, that's also true, Amy. But is that true in ES? No, it's not. I have a knowledge base that has 37,000 ES trades in it. And I have done it the other way in 34,692 of them. And the vast majority of them were winners, and adding to the range produced a greater profit than just leaving on what I had started with. And this is a really good example of understanding your business. Okay, let's go back to the retail example. You work in Best Buy selling televisions, okay? The television that is a 4K, 70-inch screen that's $5,000, that appeals to a certain kind of customer. He's going to walk in and be able to write a $5,000 check or pay cash, and it's not going to affect his lifestyle. So the way you interact with that customer is going to be very different than the guy that comes in for the $500 4K TV, and that's his Christmas bonus in his $15 an hour job. You have a much different situation in interacting with that individual. So you have to have a different structure, even though from the first step, it's the same setup. You're selling a television, but you have to manage it differently. And you can extract this out again to your business. A trader that is skilled could manage that $5,000 trade with the expensive TV with more size. But what the lesson in this particular situation is, if you're gonna play gold ranges, Jeff, particularly in the overnight and the early morning, which is when I'm generally playing gold. Otherwise, it's just a momentum trade for me, and it works anyway. If I'm going to do that, I have to pick a range, pick a size, and stick with it. If I don't do that, the odds of that particular business failing and costing me money are overwhelming, even though that's only 20% of my trades. So the 20% losers are costing me so much more. In this case, that was a $500 loser. If I had just let it go, instead of the total of 5 or 7 lots I had on, if I just let it go with the initial 3 that I put on, that trade would have been profitable at about $750. So it's a really good example of how less is so much more. But that process, that thinking process that I just went through there, is something that is not automatic. It's not something you learned in high school or college or trade school or pharmacy school or plumbing school or, you know, anything else. It's something you have to kind of teach yourself to do. Okay, is this making sense? Are you guys, you know, I'm sure it's an aha thing for a lot of you, because I'm sure you've been through the experience of having that happen to you, but that's not my point here. My point is, okay, what are you going to do with that experience and integrate that into your business? That's where I'm going. Okay, good. I see lots of good yes. Okay, and this is one of the things, you know, how I mentioned that I made some adjustments to my process. And one of them that I made, and this is one I put in and out all the time, I've done it in the past. I call it the terror. And again, this is this idea that Linda had of make yourself fun little acronyms. And, you know, it's the error, but I put a T in front. It's the terrible error or the too big error. And so it's just really easy to remember. And routinely, the only mistake I can make in a range trade is having too much size on. That's it. I mean, if I go back, there's no other mistake that I make. There's only one consistent mistake that I make at the open 5, and you guys watched me do it a week ago or Friday, whenever that was. I fade the open 5. I counter trend trade it. And you really, you know, there are times that works for me, but again, if I go back and look, it's 15%. I'm better off just not trying it. And I know that, but when I don't feel well, here's another key point. When I don't feel well or I'm distracted, you know, mom comes in and tells me that the medication that I gave her this morning poisoned her. You know, this is what you deal with when you have dementia. You know, she's not trying to start a fight. She honestly thinks that her brain isn't working. So, you know, you can't just turn around and say, oh, you know, come on, you know, but, you know, she doesn't know better. And it's the same way, you know, for yourself, the slightest distraction and the ability for your brain to be as good at critical thinking as you think it is going to change really fast. Okay, let me turn this thing off. I was also turning my heater off. Okay, so this is a column that I suggest some of you might want to try. You know, what is just the top error that you make? And in most of mine, it's pretty easy. I fade at the wrong spot. I fade ledges, you know, and but this one's really easy to manage. It's not the end of the world, because in HMOMO, you get your stop in. If you're fading it, you can't. So, you know, that one is self-correcting. Okay, and this one is a really, really subtle one that some of you have already started seeing, so I'm going to explain that one too. Edges, you know, come in 2 forms, and you might want to break yours up. I chose not to because the characteristics are the same except for this last thing. Ledges, I've told you 99% will get broken and go through. The question is executing around that. Edges, if you find a real one, will overwhelmingly go fade back into the middle. And that's exactly what we saw here with this gold trade. I was buying down here with the idea it was going to get back into here. So, you know, I refer to this as outside in. Lee likes inside out, but it's the same idea. You know, you're basically working the volume profile or the market profile in one way or another, you know, whether based on time or based on volume or both. So, so in this particular case with this one, I realized that the distinction was that I was not clear in my head ledge versus edge. And when I fade ledges, sometimes I can scalp and make some money. But again, if I go back and look at the statistics, it's not good enough to try it. So I'm better off not fading ledges at all, staying with my edge fades, because that's one of my most profitable setups. But when I get ledges, either go with them or don't, and figure out a good entry to go the direction the ledge is likely to break, because it's 99%. And of course that makes sense, but again, this is the step of taking what makes sense and building it into your business plan. Okay, so I'm going to come back to the comments and take questions in a minute, but before we actually open here, or as fast as I can, I want to cover a couple of other key points. So this whole new flow This process is about one thing for you guys. Listen really carefully. Okay, right now, I am just now starting to feel better. My back pain went away enough that I can function. And I'm back on my, if you heard this in the last webinar, you may not have, I'm trying to get myself started on a 10K a day for a year challenge that I will do somewhat publicly. And that's hard. That's a $2 million a year if you trade most days. It's not all of them, 200 of 250 or so, depending on the year. And 10K a day, you know, that to average that, that means, you know, losing days can't be very big and winning days got to be bigger than that. So in order to get that, to be able to do that on the scale it will take, I cannot afford to make any errors. Now you say, well, you're going to make errors. How can you not afford to make? Okay. So here's again, where you have to take yourself out of the you know, David or Jeff or Darren or Amy or Lee or whoever sitting at your computer, you know, that's the employee, but you got to take yourself a step back to the business again. And you got to say, okay, in order to be able to do 10K a day with the scale I want to do it, which is going to be 15 lots, I might go up to 20, but I don't think I have to. I even might want to, I looked at doing it with 10, but it would be hard. Possible though, 10 is doable. So if I look at all that and I say to myself, okay, what do I really need to focus on? I know my setups make money, so I have to make sure that I don't lose money. Again, I've told you over and over again how important that is. So the way to do that I've used in the past, and I suggest you guys adopt this, is simply allow yourself to have 3 outcomes from a trade, okay? Listen carefully. 3 outcomes. You can have a large profit. That's the one we all want. You can have a small profit. You have heard me over and over again say, take the small profits, always take profit, don't lose money, because you've seen over and over again, you know, you can hit $20, $30 a trade and end up with a couple $100 in less than 15 minutes. I did it in 7 minutes the other day. And the point is, on an hourly basis, that's a really good rate. So you stick your employee down in the chair and you say, okay, go do this for 15 minutes or an hour until you get tired. Get done with that, and then take a break, employee. I mean, imagine you're the manager of the Best Buy and you're going up to one of your cashiers and saying, go lunch for 30 minutes. That's what you're doing, guys. So you have to think that way. The person sitting there executing is the employee. You're the general manager running the business. The other type of thing you can have is a very small loss or a break even. Those are acceptable. And actually, those are the most educational results you'll ever have. That's where you'll learn. The thing you cannot have is these. And you've all been talking about this in the chat, and I want to emphasize it. You can be really profitable scalping for a month and then have one day and blow the whole thing. You cannot allow that to happen. And the way you do that is by managing that employee. And in order to be able to manage that employee pushing the buttons, you have to be able to step back and be the general manager. So if you're a corporate experienced person, think about it in terms of levels of corporate executives. If you've ever been anywhere in the middle, a general manager, a marketing manager, a director, anything below a vice president, then you know exactly what I'm talking about. Everybody that works for you executes. Your job is to take the vision of top management and explain it so that it's executable to your people. That's your job, but your job isn't to do it, that's their job. If you micromanage them, they'll hate you, right? You don't want to go in and be the cashier. You want to help the cashier be a better cashier. So this is a really good example of that. What I'm doing here is I'm saying to myself, okay, as a businessman, I know how to make 10K a day. That's not the problem. My problem is my fucking employees making mistakes, okay? So this is a really good way of anytime you start to make that mistake, just clamping it down. And that's what I did in this trade. I knew it was going to do that to me. It's done it so many times, but I said, what the heck? You know, now we're up at 72. You know, I really liked gold long this morning. That was the premise I was playing there. Anyway, so that's where I'm going with this whole thing, and I hope that makes some sense. Now we're going to talk about my own setups and some of the topic of today, integrating the open. That's the next place we're going, and I'm going to give you more examples of this along the way. But I just want to I want to take that one example right there and put it into two different viewpoints. Okay, this has been really useful for me, and it was useful for some of mentees over time. Think about it this way. Put yourself into two seats, okay? The employee that executes and the president, the general manager, whatever, the director that stands across the room and critiques that person. And I've actually, get this guys, true story, I've actually hired somebody to stand behind me, you know, a college student, and I've said, okay, here's what I should do. This is this is what this employee should be doing. This is his job description. However, sometimes he's a stupid idiot and does something that's just totally random that makes no sense whatsoever. And I don't want to fire him, but I want someone to whack him on the back of the head and say, what the fuck are you doing? Because that is not your job. Okay, that is not what you're supposed to do. And I literally paid a college student 20 bucks an hour to sit there and do this. And I've done it a few different times with myself and with students. It's really helpful. And what you get to the point where you can do that yourself. And I literally will get up and I will walk 6 feet back from my desk and I'll say, okay, if there was someone sitting there and I can't do it, but I have to explain to them what they should be doing, would I be able to do that right now? You know, or am I so caught up in being that guy sitting there that I'm losing sight of the big picture? Oh, you need to fire yourself regularly, Jerry. And that's why, you know, if you can find someone and literally pay them to be your devil's advocate, if you know the term, yeah, to literally, I mean, I gave the guy permission. I sat him down and I trained him for a week on what I was supposed to do, just enough so that, you know, the broad strokes were clear. And then the following week, I said, okay, anytime you see me do something, I want you to just whack me and say, you know, that's not what you told me you're supposed to do. And then explain it. And we'll argue if I think you're wrong. And that's the way I can train you. But 9 times out of 10, he was right, you know. So you told me on my gold trade example, you told me that, you know, you wanted to size that down. So instead of going in here with 3 and adding 3 more, you know, and what you should have done is put the 3 on and just let that whole range work, because it never actually violated the range I was looking at. It just got to the point where it shook me out, right? With that one little spike. And I know you guys have talked about it, and everyone who's ever been a trader has ever had that happen to them. And again, if I had just not been greedy and just said, you know what, this always works better if I just give it a small start and leave it there, don't add to it. I may not make as much, but I won't have the stop out loser. Okay, so that was what happened there. And, you know, I will adopt that and see if it truly is the solution. It should be. In my experience, you know, that is how that works. Okay, let's converse and take a little with the chat and do a little questions. And then I have some refinement I want to go into about trading the open that I will show you. I'm not going to worry about what it's doing today. And part of that is the example I'm going to tell you in a minute. So let's look at the comments and see if anything's good here. Okay, yeah, you know, it is like asking yourself, why did I mess up, David? But what you can do differently is by being 2 different people. Role play with yourself. Or if you have a really good friend or trading partner that you can do this with, that might work. But in my experience, that's not a good approach. A much better approach to have a person who's completely distant, who doesn't know you. You know, and then I know people who are really good at like acting, and they just literally make themselves into 2 different characters, you know, the employee and the manager, you know, the boss and the employee. And if you think about it that way, you know, you can switch modes. And it also is a segue, Steve here, a number of you have expressed frustration with scalp to wait mode transitions, or transitions from scalping to intraday swing trades. I'm going to address that on a mechanical level next. That's something I have a lot of good feedback for. But beyond that, this is a really good way to do it. You know, stand up from your desk and say, okay, the scalping employee is going to lunch, and I'm going to sit the wait setup or the intraday swing employee down, and he's more patient and he hasn't had coffee, you know, he's drinking herbal tea, and you know, you get my drift. Okay, so yep. Okay, good. I'm seeing lots of good comments here. Make note of what I said there about large profit, small loss, break even. That right there, guys, you know, that's what you tell your employee. And anytime your employee breaks the rule and has a large loss, that employee needs to be fired or disciplined, or you need to go back and say, okay, I need to retrain that employee. You know, and following my metaphor here, the retraining is the idea of saying, okay, that actually works. if I just use less size. As a one lot trader, that might be hard to do, but it might not. Put it this way, if I had done all of those as one lot trades, I'd have a couple of small losses and a lot of big winners, over 80% winners. And by the way, none of this is even remotely possible if you're not keeping statistics, like that trade log that I posted and suggested, that had the setup and the quality of the setup and the result and the MAE on it. Now, a couple of you have also asked me about that. Oh God, I can't keep track of every trade. Don't try to do that. Do them in blocks. So, if you're doing 10 scalps and they're all more or less Momo scalps, then just treat that as one trade and just make a note, it's a block. That's how you do that. Okay, yes, we're going to talk a lot about the transition, David. It's been a challenge for me. It is one of the most challenging things to do if you're going to try to trade both ways. The solution a lot of people take is just, I'm only going to be a scalper. And you know what? To get through the combine, that might not be a bad idea. And to build your account up, because you'll never lose a lot of money. You'll just gradually grow your equity, and that's the right idea. But the trouble with that is we're all human, and remember, I've got this thing in my mission that I want to hit occasional weight setup home runs. That's what HR means. And with size on, the $100,000 trades. And, the thing is, you might get one of those once a year, or whatever. And even then it's great if you get it. So the trick is just not to really focus on those. And a good way to do that is with 2 different employees and 2 different accounts. If you, get that far down the road. I've mentioned that I do that. I have a lottery account where I'll pretty much do whatever I want and not worry about it. I just put $10,000 in there whenever I lose it, and I haven't had to do that in a long time. But I'm prepared to. It's a way of just taking a tiny bit of your trading capital and being willing to play. Remember, I've told you over and over again, if you don't play and have fun along the way, you won't survive. You really won't. Okay, so let's look and see if the comment need a fireman or Christmas bonus. Yep. Okay. How do you calculate the MAE, Sam? Okay, I just use the one that I get from Ninja, which, there's my $500 loss right there, guys. You can see it. And it shows up on that, if you set the columns right. This grid, and you can ask for it. The other way you can see it is if you just go here and average MAE. That's the number I use. That's the easiest place to get it. Okay, and that was the only thing I've done today, by the way, was that one thing. And partially because I'm finally feeling better, and I plan to do some things later today. We do have FOMC today. And on FOMC days, you should have a rule. You should trade the open. If you see a nice setup, and there's some fun stuff. Look at this. There's some Momo there now. I don't know that I'd chase that in rollover week because the odds are it's not going to have any follow through, but we'll see. Anyway, yeah, watch it. Right back the other direction. Yeah, this is the problem in rollover week. You see this a lot, that you see what looks like a really strong move start, and then it just doesn't go anywhere. A lot of that's because people are rolling, and so, they'll push down, they'll sell a bunch in one contract, and then instead of buying it back here, they'll buy it back in the March contract. So you won't see the buying here, and you'll think, oh my God, the order flow is overwhelming on the sell side, but you'll be wrong because of the rotation and the rollover into that contract. So this is a really good note too for experience down the road. Rollover week is a really good week not to take any significant chances and to just kind of work on stuff, because generally good ideas don't follow through and you'll get frustrated a lot. And by the way, I'm tracking the volume now, and we're not even close still. This is the March contract. It's doing 46,000, 5 times that up here on the ES for December. So we're still not anywhere near, but that is triple what it was yesterday. So it's getting there. And, you'll see more today, tomorrow. Thursday is usually the day. Somebody asked me, middle of the week, what day? It's usually by Thursday that, it's pretty much, moved over. People want to start focusing on option expiration the following week. So rollover pretty much clears. It used to also be much more significant. And I think all it does is create confusion these days. I don't think it really has any significant edge, or in fact, it's a negative edge. The confusion causes people to, and if you're having that experience this week, you're getting into a setup that looks good and it's just chopping you up. That's probably why. Even stuff like the one tick drill in this week can be hard. Okay, yeah, sometimes you get springs and upthrusts somewhere in the same, the same bar, and that, again, the reason, if you, this is always important, instead of going into the they or the algos are out to get me, or, the HFTs are going after my stops, or all the bullshit you hear from the rookies, understand what's really happening, and it's not hard to understand. There's so far 46,000 contracts have traded here. That's enough. So look at that's as much as some of the others will do all day. So what's happening is, think about this. If you're doing arbitrage, you could be looking for imbalances between the two contracts and migrating a position, that's maybe a hedge for your stocks across and making money in the process of doing it. That's what's happening. So yeah, I strongly recommend that. I used to tell people not to trade at all during rollover, or at least the main day of it, which, Wednesday, Thursday. And now I just kind of, take a step back and I work on other stuff. Well, it only happens once every 3 months, so it's not that big a deal. Oil rollover and gold rollover are completely different. I'm talking about index rollover here every 3 months, guys. So don't let that confuse you. Oil rolls over once a month and it's completely different. So, we won't get into that one at all. And gold, same way, they roll differently and they have different characteristics for roll because there's different strategies in play. Okay, let's go back to the agenda. I don't see any more questions or comments. So, okay, this idea of business versus the employee, that's an overall theme, but I'm going to segue a little bit now to what's the right way to describe this? I guess it goes into process refinement, and it's pertinent to rollover also. So let me just explain what I'm trying to tell you, and then we'll go from there. You might have noticed this if you watch my process. I made a slight change in some of my context intraday stuff. First hour high low greater than open 5, and what I'm talking about there is particularly it's consistent with gaps, but it doesn't have to be. And again, if you understand, the market theory and the market profile theories, this already should be something but if you haven't gotten to that depth, this will be helpful, I think. Let me just grab the ES here so we can talk to that one. Okay, so I've told you a couple things about the open 5, and really the overall thing to remember in the context of this particular conversation is that this is traders displaying and to some extent initiating their intentions for the day. Okay, so to take it out of, imbalances and absorption and high volume nodes and all that crap and just put it into, what's kind of going on under the covers. And again, not the perspective of the employee pushing buttons, but the perspective of the general manager that is running this business. Okay, I look at this and I say, okay, the big players are not trading overnight, or they're trading light overnight, but then we get open and they start to show their intentions individually and collectively. Yeah, journalytics is really good, and I'm in the process of transitioning to that too, Bar. I agree with that. So anyway, going back to this, that's a really good way to look at this as kind of the posturing of larger traders given what happened overnight in the news, and if we had any economic indicator releases or whatever. And once that all gets going, they've kind of put some money on the line, they put some positions out, they've made some trades, and they basically given a glimpse into their thinking for the day. That's how I look at the open 5. Again, not from a trading perspective, but from the general manager perspective. Okay, now let's take that and, whoops, I don't want to do that on 30 seconds. I want to do that on 5 minutes. So give me a second here. All right, and this transitions also to the first hour high and low indicator or setup as well, really well. Okay, so yesterday was a really good example of what I was talking about during rollover week, and also how these two things connect, the open 5 and the first hour high low, or the initial balance as it's called, as a general manager. Again, we'll come back to execution, what you want your employee doing with respect to the setups later. But to truly understand the relationship between these two ranges and why as a general manager, they interest me so much, you have to step away from it, okay? So that's what we're doing here. We're looking at this and we're saying, okay, let's just assume this is yesterday. Because I actually made this mistake too yesterday, but then I managed to turn it around. And again, this is a classic error of mine. And it just comes down to a scaling question in the gold trade. In this trade, I've changed it a little bit. I don't want to elaborate on how right now because it will confuse you. So just stay with me here on this first part for a second. I'll come back to that. All right, so if you look at the very open yesterday, okay, I'm going to just try to get a couple of 5 bars here, which is hard because I have them so skinny. Okay, if you just looked at that, okay, and we opened and then we just totally got sold right away. Although interestingly, there was a bit of change in the delta as that was happening. But the way I traded this, just again to explain what I'm talking about and the mistake that I made, but it was not a significant one. I got short right away and jumped in and caught a really nice momentum move down and made some money on that. It was really fast. It was a good trade. It gave me some bias I shouldn't have had to. I exited down here, which was obviously a logical place, and then we turned pretty sharply and we started going up. And given all of the stuff as a general manager that I know, the proper way here would have been to either sit on the sidelines or to get long and then see how it handles this. Okay, that's the pure order flow, without looking at the dome and just looking at the candles and the way, that the cumulative delta was moving in the volume. That is the correct interpretation of this, okay? And again, this is an example where there actually is right and wrong, okay? So it was definitely correct to be short here. You can't argue the point any other direction, or just not trade, which is a valid position. When it got down here, it was a really clear take profits, at least partials, and see what happens. Obviously, in this case, it was a take them all. It bounced fairly quickly. On the 30-second chart, if you saw that, it was a pretty quick move. I remember getting out and saying, oh, wow, I'm going to start looking for another short. That, that was the thinking. But the correct thinking when we got up here, well, let me rephrase that. There was 2 ways to look at this situation here. One way was to look at the open 5 high and fade it. The problem with that, again, is that falls into that category that I've identified where if I fade them too early, the 5A counter trend or fade, and the definition of fade here is really simple. If price is going one way, fade means taking the trade with the idea it's going the other way. That's your objective. So looking at this here, there's no doubt that this was a short, and yeah, you might have caught this as a long down here off this inflection area. That would have been a good trade too. But even if you did, and you're long now, and it's coming up into this, you got to be thinking, okay, the same thing. This is the place to take profits or to re-short. That's the correct thinking. There's nothing wrong with that thinking yet, okay? Now, here's where the thinking becomes wrong, right here, okay? At this point, what this has done is it has invalidated that drop. In fact, it's a high volume reversal of that drop. And it has said, okay, this is one of 2 things now. It's definitely not a short. It's too aggressively moving up. And the only place you might consider a short is if you get a true upthrust here. That's one way to look at it. The other way to look at it is that you are going to break out and you have a long here, which, in hindsight, is probably a good interpretation looking at the action. But if you were just right here, you wouldn't know. But the problem with this trade working as well as it did was that energy was really strong. And so a human's going to say any weakness here, and it's probably a reshort. Okay. And now let's see what happens. That's exactly what happened. But look at this level right here, and that's why understanding these inflections really quickly becomes so important. It did do that, but then as soon as it did, the buyers reasserted themselves again. So what, and look how the first hour high and low framed that, okay? It hit the first hour high right there. I mean, it just couldn't be more perfect than that. And that also happened to be the low of the previous day. And again, you know, if you look at all the statistics and you know, and all in my case, looking at my trades that have made money in the past over the last few decades, you know, these are really significant spots. But this right here, you know, just, whoa, wait a minute. I mean, everything about this drop made sense and this buy back up into here. But after that, you don't have enough information. We're consolidating now. And so you had two really aggressive moves. So you either had a long bias that was really aggressive or a short bias or both. But now what's happened? Okay, that stuff is all over. And if you just look at what you have here, and this is the point I'm making about the two, you have to look at the two and integrate the two. And this is the next step in the setup education. And it's not only about the first hour high and low, it's about how the opening five transitions into the first hour high and low, okay? That's the point we're trying to understand here. And I'm going to show you a bunch of examples of it. And this is, this part right here. Flip, springs and up thrust, the first hour high low. But more importantly, it's the first part of that is the integration with it to the opening five. And again, this is not furu bullshit where there's some, you know, step one, step two, and if it does this, you do that. Yes, there's some great statistics you can use to help you build setups here. For example, you know, if we break the first hour high, the odds that we will break the first hour low are ridiculously low. But if we do, that's really significant. That's called a double break. And if you Google that and look up double breaks of the opening or the initial balance, you know, there's a million statistics. Knock yourself out, build yourself some edges. There are some there. My point here is I'm not telling you this in that context, Fourier-like. I'm telling you the relationship between the two and how I understand it and the value that I have been able to extract from that for trading these two ranges, okay? So let's look at what happened yesterday. If you had totally cleared your mind here, okay, and I'll get to your question in a second, Lee, because I think it's pertinent. If you had totally cleared your mind here, you know, remember, okay, I had a really profitable drop here, really profitable move up here. In Jeff's case, didn't take that trade, was thinking there was another short. Turned out he was right. Didn't get out of this fast enough, scalped out, made some money, but this surprised me. You know, again, not necessarily in the context of a rollover week, but in just that was an unusual reaction, I guess. Although, you know, again, in hindsight, it's not, but, you know, while it was happening. And so instead of just taking a step back and starting over, and saying, okay, we've got a consolidation and there's really no significant movement here. So, you know, forget the long, forget the short. Let's just look at the ranges, you know, thinking of the open five as the intentions of traders at the open, and then the first hour high and low as their commitment to that. You know, as that unfolded, did they stay with it? You know, well, whoever was short here either got long or took their profits, and then anybody who got long here, you know, took profits or is rethinking it, you know. So again, if you just look at the thinking of the participants underneath here, this has given you a tremendous amount of information. I'm going to pause there for just a second and I'll come back to that. Okay. Is it fair to say if the first hour high low is wider than the open five, then we're seeing new information? Yes, exactly fair. On the same token, and Lee always comes up with great questions and great comments, guys, because he puts it into the context of a trader who's been doing this for a long time. And so he immediately goes to the manager, and then he goes back and forth. And you saw that in his comment about a good process is really nothing more than a way to manage your setups over time in your playbook, and that's very true. So there are a couple of consistent things here, and what Lee said is one of them. If the open five is inside of the first hour high and low, then people are collecting information, and you need to sit on your hands and take a step back. There's really no bias there. I mean, it's the perfect definition of consolidation. I mean, look at this. I mean, look at this rectangle here, right? I mean, that is exactly, I mean, I can look at it that part, or I can even come down and look at it that part. This is what consolidation looks like. I mean, by definition. So, hang on a second. So, let's look at some other examples of the same idea, but how they happen differently. Okay, this isn't a good one here. I'm just going to literally randomly pull up charts in the NASDAQ and in the ES and just find examples. Okay, here's another one. This is yesterday in the NASDAQ, and same story. We had the opening 5. You know, that's the NASDAQ's version of what I was just showing you in the ES. This is a really good one here because opening 5 was all about buying. I mean, there was no way you could interpret this in any way other than to be along, all the way up to the end of the first hour. And then, you know, just think about this. If you had been doing this and all, you know, that's the open 5, and, you know, you caught the long and you made $3,000 on your 2 lot, you know, and you're really a happy camper, and, you know, you cash out here and, you know, you go to the bathroom and have your Cheerios and you come back, you know, what's your mentality? This is a long day, right? I mean, that's a pretty strong move. But that's the wrong mentality. You got to come back in as the general manager and say, okay, how many cashiers do I need? You know, the store's pretty quiet here. So it's that kind of thing. So don't go in there with that long bias again. Go in there and look at what you're being told, okay? This is the high of the day right now. That's really significant. So we had, you know, the opening 5 and it just got completely bought. You know, we don't know any of this yet because it hasn't happened. So it looks more like that. Okay, it's hard to do this. You know what? Let's just change this from 5 minutes to 2 minutes or something. It'll, not that I suggest that time frame. It'll just be easier to see this. That's all. That's what I'm doing. Okay. Yes, much better. All right. Now, so here's that trade or that situation yesterday. And oops, that's not the one we want. This is the one we want. Sorry. Okay, so, you know, look, if you did anything, you know, even with my natural instinct to do counter trends, I would not have been stupid enough to short this. I mean, literally every bar took out the next bar. I mean, momentum just doesn't look any stronger than that ever. And, you know, look at the flip. I mean, it's just all on the buy side and the cumulative. I mean, everything is telling you this along, right? All right, that was pretty easy. But then look what happens. You know, the first hour high is absolutely to the tick the high of the day. That right there is significant in and of itself, not necessarily to short it, although, you know, your risk short's pretty small. But if you just kind of look at what happened here, okay, you had upthrust after upthrust. There's one right there. That's the first official upthrust for this time frame. So once again, we're talking about first hour high and low and open 5, but here's a really good upthrust example. And again, this is why I call these sessions putting it all together. If you understand the meaning of your tools, then the setup will make total sense to you. Okay, the open 5 was nothing but a buy. And then for the rest of the first hour, you know, and my interpretation of this is some shorts got trapped and they had to cover. I mean, that's what I believe happened here. And all they had to do, you know, if I remember correctly, this was based on an economic announcement or something, and, you know, some news item was higher or lower than it was supposed to be. And I don't know, I think that was it. But whatever it was, you know, the result's all you care about. And, you know, you had a couple of spots up here to get out of your long and to consider a short, but with that big of a move, probably wouldn't have done that. But boy, when it did this up thrust right here, you know, that was a real clear signal that it was low risk. Why? Okay, look, 34,000 on this swing up here. Then we pull back, a low volume pull back. So classic long re-entry. A lot of people probably did that. And that's exactly why you get an upthrust. The people that bought here couldn't get any traction. It couldn't even, you know, make a new high. And on top of that, the volume was pathetic. I mean, you have less than 10% of the move. And more importantly, you know, you have all these people that bought that dip, and there's just literally no follow through. You'd want to see more aggression. So look what happens, you know, it just never even retests that one. So, you know, if you were smart enough to short that or the one next to it, or even this one, you know, you've caught a legitimate upthrust. That's exactly what they look like. And again, you know, I will spend more time talking about Weiss and more time talking about Wyckoff and springs and upthrusts and all that stuff. But the bottom line here, again, I like to boil it down to just what's simple. What's simple about springs and upthrusts or Wyckoff total, there's a million great ideas in there. The only two I use are springs and upthrusts. Those are the only two Wyckoфfian concepts I use. Feel free to learn the rest of the stuff, but I found an edge here and I don't need any more of one, okay? And you should at least be able to see it. It's pretty straightforward. So any attempt to go back up to particularly a first hour high, that's that clear, that just doesn't have any energy, you just want to get short as fast as you can. Because, if nothing else, you should at least get down to here and maybe right back down to the consolidation. And, a good test of that will see, and I've said this before, see how it handles the open 5B, in other words, the retest of the highs and lows of the open 5. Because again, that was the early intentions of traders. Now we've seen the 1 hour intentions of the traders. So now look how this played out. I mean, it just was upthrust after upthrust. Some people like to call this cascading down, which is a good description of it. But this is the kind of trade that you get short and you add until it stops working. See, now, contrast that range trade where adding to that range trade has cost me money. It's not possible for adding to this trade to cost you money because the trade keeps working further and further. So let's say it consolidated here, and when it started to break down, I added to it again. Consolidated again. Okay, everything I've done is still profitable, even the add. And so, I mean, maybe I'd take one off there, maybe not. Now it starts to break down again. I'd add to it again because my risk is just that whatever I added, I'll take back off, but the initial trade is still profitable. So this is why these setups are all weight setups, and they are weight and scalp and scale. It's not either or, it's sometimes both. Sometimes you scalp around a core position. Sometimes you scale in and just keep building it. And so these two go together in that sense. You will often see them do that. I used to even have like a little box around here. And these are all the ways you can kind of use the graphics to just give you little clues that, that your brain will pick up on. Oh yeah, I remember I did that because, it reminds me that there's a lot of times, confluence or correlation between those two setups. Okay, so I mean, this was a really sweet trade. No matter whether you traded on the ES or the NQ, I mean, look what it did. I mean, once you got here, it just did the wiggle, but it never even retested it, So this is just a perfect short. And again, that gave you a lot of information, as did the Wyckoфfian behavior afterward, okay? So it wasn't just the opening range and the market profile, which is based completely on one set of data, which is the volume at individual prices. And if you use the actual market profile, it's the volume at price at time, okay? I don't use that part because I can see it, but again, there are some edges you can find in there. But this just simple integration of the open 5, the open 60 or the first hour or the initial balance, those are all the same thing, and spring and upthrust behavior. That, again, you've heard me say this over and over again, but if you just learn how to do springs and upthrusts, you can make a living doing that. And you can wait till the first hour ends and then trade after the first hour every day. I do know people that do that. I don't think you need to do that anymore. That used to work better, in the old days. I think now the tools are good enough that you can do both. But that's a really good example. Anyway, let's put the time frame back, and then we'll discuss it and take some questions. But look what happened here at the low, by the way. See, that was the open 5, and then the first hour low, right? And the first hour high, and then look at this. The rest of the day, you had a perfect range balanced between those 2 points. So, oh, I'm sorry, I'm looking at the wrong one. Yeah, this was the one we were talking about. Sorry about that. I make that mistake sometimes when I change time frames. So again, clearly it was a long, clearly it was a short, lots of upthrust along the way, perfect upthrust there, consolidated, tried to test this range, which goes way back. Once it broke down from there, another upthrust, right? And so again, as long as you play general manager here, and you don't get too caught up in the action, but take enough step back, that you can see the integration, and that what Lee said, that's a really good example, a good way to think of it. The first hour is just more information, and that is exactly why I have this in my process over here. Okay, so this is what I was talking about. If you have a significant gap, or another way to put that is just a lot of energy in one direction, which is, similar to a gap, same idea, then, look at the first hour high and low as being more information and more useful information as the day evolves than the open 5, okay? And that is exactly what that means. If you do that, and you track your most significant error and figure out a way to integrate your process so that you do not make that error, or you make it with less money, I promise you, you will be able to be a profitable trader. I promise you that if you do those two things. Now, that doesn't mean you're going to make a living trading, because then your business is going to go to the next challenge. And I've explained to you guys, I've been working this challenge for the better part of 18 months. I'm a successful trader. I can make money a bunch of different ways any given day. But I want to put a challenge in front of myself where I do that, and I do that at an extraordinary level, 10K a day. That's top 1%, no question about it. But not only that, I want to see if I can do that for a year with all of my health issues and all of my, my mom's Alzheimer's and all the other crap going on in my world. Okay, so take that out to your world, okay? Build a business plan that has a 10,000-foot view. Mine is, put it this way, let's say I could do that for a year. I will have pretty much accomplished everything I want to do in trading. There will be no other significant thing that I have in front of me. And, at age 60, that's not a bad thing. Next year I'll be 60. So, but this is, if you're 20, just think, you have 40 years to do this, David. So don't try to do it all in one day. I mean, the better you get at perfecting this integration between your process and your setups and your management of your employee, that is the key to long-term success. And then really the sky's the limit, and of course, the trick is not to manage your own money. If you really want to be the top of the class, go back to my example of Linda Radsky. At one point, I think she was running about a $10 billion fund. And just think the management fee alone, you'll be making a couple $100 million a year if you're in that league, guys. That's the beauty of the other people's money concept. And there's no barriers to entry. If you're a good enough trader, money will come to you over time. You're not going to get investors with that kind of money in 5 years, but if you have a 10-year track record like that, yeah, you could attract hundreds of millions of dollars of capital. But you're not going to do it being successful for 6 months or a year. And again, this is kind of what Top Step is trying to teach you with the idea of the $150,000 account and the loss limits. And, so every time I see these people saying, well, it's really only a $7,500 account, yeah, okay, newbies, you're right, but you're missing the point. You really are. You're missing understanding trading as a business. And, Top Step, those of us that are on that board, once a week, those guys come in, and the rest of us, Pete and Lee and me, and there's a half a dozen other guys like, oh, it's the weekly, Top Step is a scam post, and bless their hearts. The faster you can get away from the idea that they are out to get you and that there's some conspiracy to take your money other than just a really well-designed structure called the market, whose job it is to make fools out of as many of us as possible. That's really all there is to this. So be a general manager and manage your employee and do that separation. Figure out your worst errors and make sure that they only do at absolute the worst a small loss. And that's relative. I lost $500 this morning. For me, that's a minuscule loss, but it's still, it hurts. When I'm really doing well, I don't lose any money at all. Most days, my drawdown is less than commissions. And so, for me, that's like the end of the world. And I have to really learn to manage myself too, I'll give you, there's other pieces to this too. You can find inspiration many places, but I'm a Pisces and I'm not a real big, astrology person by any means, but Pisces have certain characteristics and I am a classic example of them. we tend to be really deeply emotionally involved in things we do. We tend to be good at them, but we tend to kill ourselves internally, tug of warring along the way. These are all Pisces kind of, water fish characteristics. And so, I've learned that if I take myself into two different personalities, the general manager of the whole big idea, and then the guy sitting here pushing buttons, it's much easier to segment that. And, I will not lie to you, after 46 years and 59 years old, I still struggle with that because I'm human. And the natural solution of many traders is to try to figure out a way to automate themselves. And again, there's nothing wrong with that. And I'm not a proponent of that. I shared with some of you that I'm building algorithms I do it all the time. I work in ADL and I do a bunch of stuff that you've never even heard about or seen. And it's my way of trying to automate those errors. Like, is there a way that I can build my own little algorithm to trade gold that doesn't let me make the mistakes that I make and profitably executes at least some of my setup for me so that I can focus on the parts it's not capable of executing? So, all right, let's go to questions. And yes, the 3 possible outcomes to any trade is one of my absolute favorite ways to grow. Lee, I saw your comment on that. Okay, let's see. I'm going to go through comments, then we'll take questions. Yeah, the voice changer thing is pretty funny. You know what I used to do? I'll tell you a secret, guys. Trader PD, I'm answering your question. Pavel, if you go into, those of you that are using Rhythmic Trader, you need to have the Pro version, which is, they're both free and you just download them. But if you're using TopStep or Rhythmic in any way, through TopStep or by yourself, you can go into the risk parameters there and you can put in, how many contracts you can use per instrument, and you can set loss limits and stuff. And so that's one of the ways that I manage this. I put in a $500 loss limit there on a week like this. And so when it gets to losing $500, it just locks me out. And unless I physically go in and change that risk parameter, that's my first circuit breaker of any day. And it's really frustrating on a day like this. So, don't get me wrong, I'm still human. We're not trading gold at 72.30 or 72.3. And remember, I was long at 69.9 with a 7 lot. And gold is $10 a tick per contract. So I'll let you do your own math, but that's a really nice 4-figure day, guys, that just because of a slight error that I've made over and over again that I'm aware of, but that I'm still working out, I had to manage risk and get out of the trade. And the rookie mistake would have been to jump back in with less size. I don't recommend that. If you hit a circuit breaker, take a break. The idea, reset your account and start trading again immediately, those aren't good things. I've done that sometimes if I'm working on a strategy, and I'm fining myself $99 to do a reset. I've told you I like to do that because it's a real self-accounting way. It doesn't break me. It's not going to end the world, but $99 is a nice, lunch or dinner. So at least in some places. So, that's enough significance that I'm punishing myself. So that's how I suggest you deal with that. All right, I'm coming down to the questions and the rest of them in a minute. Okay, the wait mode on yesterday, yes. Again, it's always going to be difficult until you build a methodology for yourself. And I really like the employee-employer one, and particularly if you can find a way to integrate that 3 possible outcomes thing. And and figure out, for example, with circuit breakers, back when I used to have, multiple losing days in a row and whatnot, I have one rule for that, okay? I have a circuit breaker for the day, and this 500 may not be that, but some amount or some number of bad trades or whatever. And that means I'm done for the day. And I've told you, I will do that. And then if I have 2 of those in a week, I'm done for the week. Think about this for a second, guys. Yeah, $99 is your groceries, good. Then that's a really good way to spank yourself when you're a bad employee, Jerry. Anyway, so, with circuit breakers like that, and guess what? Those are ones I developed for myself 30 years ago, but they're totally consistent with the weekly loss limits that TopStep uses. And the reason they do that is because they don't want you getting in that situation where you have a bad day and then you have another bad day. And there's a guy posting it right now on the TopStep group. He's now, he's a funded trader and he's $300 or whatever away from losing his account. And, once you get into that psychological trap, the only way he might be able to get out of that is to do, emergency scalp mode for 1 ticks and try to build up another grand or something that way. But, from a human point of view, he's so beaten down that, that's going to be a really hard turn to make. So, don't let yourself get that far into the losses where it has that profound an effect on you. Okay. So the MAE, Sam, if you're not using Ninja, there other platforms do it too, but the one I like is the average MAE because that looks at all the trades, separately. Okay, yeah, Amy, your comment about a crap day, stop for scratch. That's my way of measuring myself. If I like that one day I did in the webinar, I was down $3,000. If I can just get that back to break even, as far as I'm concerned, I am a rock star. Because on any other day, that's $3,000 profit. So, the fact that you can turn around a negative day, minus $500 and get that back to break even, that's perfect. But don't try to make it profitable after that. Pat yourself on the back and buy yourself lunch. Again, I can't emphasize this enough. Think about it from the point of view that you are managing an employee. If that employee just went through that, he was down $3,000, and not only would you fire him, but you'd sue him for, for negligence, okay? And then he manages to bring it back to break even. You're going to say, cool, now let's make some money. No, you're going to say, good job, cashier. You found the money you lost, or whatever it is. Take a break, good job. You have to reward people when they do something. That's the skill that a manager has, that has active employees, particularly in a retail-like environment, which is so hard on those employees. So do that with yourself. You're in a game that is hard. It's the hardest game on the planet. So, be nice to your employees. But in order to do that, you're going to have compartmentalize. Remember, I used that term last week. You're going to have to put your brain in boxes and have 2 different personalities. By the way, one other comment, totally apropos the Gobi Desert, but look at the lack of correlation today. The YM's down 30, the NQ's up 20. Those are almost exactly opposites. The ES is up half of that, and the RTY isn't doing anything. That doesn't make sense. Did that roll? No, it's trading, huh? Wow, it's totally flat. That's unusual. I have an RTY chart here that just is so unusual. I'm wondering if something's wrong with my data feed. No, there it is. Huh. Wow. All right. Anyway, so that was just an aside. And so, let's see, I'm reading some of the questions. So yeah, Journalytics has some really, I'm commenting on Bar's comment. Journalytics has some really cool statistics and a voice interface and all kinds of great stuff. It's running on my new computer. This computer just doesn't have the horsepower to do it well. But I suggest you all look at it if you're using any of the Jigsaw stuff. It's a good tool and it's getting better. And Peach has hired some more developers, I understand. Yes, now Bar commented about that day that we were looking at was an example of a break of the first hour low. And yes, that is true and that is significant. And in this case, it was also the open 5, which makes it even more significant because that was, a really defined low. And when, we had all this buy energy and then that low got taken out, anybody that got caught long in here just puked out. And that's exactly what happened. But if you look at other days, this was that one day that I was trying to trade, or one that's similar to it. And, you can see where, you get the opening pop and then it just kind of doesn't do much the rest of the day. Those are hard to trade. And, here's another example of where, you had open 5 down energy and then the first hour low contained it and gave you a beautiful long. So again, you can't let this bias impact your interpretation of this area. You have to look at them collectively, okay? So I really encourage you to be the general manager in that evaluation when you do that. Okay, let's see what other comments we have. Yeah, Lee's comment is great, everybody. He nailed it, that it's collecting more info. And remember, that's your job. Think about it. Your job as a discretionary trader is to collect info until the point where you see your edge exist. I mean, you know, if you're thinking in bets at any given second, you know, if you just look at, I mean, what I like to do is just grab a chart, pick a random chart and just go somewhere. Let's get some more days here. 5 minute, 3 days. Let's get 10 days. Okay, and this is a great exercise we're going to do, and it's consistent with the concept there. And you know, this should all be these should be golden nuggets to you guys, but a lot of you may not be yet understanding the relevance. Here's a really good one. Okay, so open 5, you know, hard, aggressive down, contained by the first hour low, and then again, the same story at the top, and then the rest of it was just a normal range day. This right here is what Jeff is talking about when he says the absolute vast majority of days are range days. That is true. And what does that mean? They will do this kind of behavior. So the day itself will capture some previous days. Obviously, you won't see this here, but, and the open 5 and the first hour high and low will consolidate around a very pretty symmetrical profile. That is really typical. And that's why I say that most days are range days. Here's a day that's not a range day. Had strong open. This is the one we were talking about before. Great short entry, which happened to be consistent with this area. That's why high volume previous days nodes are useful. And ledges, this is a ledge, right? But notice this, guys. Ooh, this is a really good educational point. Remember, 99% of ledges break. Guess what? It never got there. It was an edge, not a ledge. If it got there, so look at that price right there. That price was 51 and it has struggled at 50. So that's a really good example of how that 3150 area has been an inflection point. And the distinction between a ledge, which is the one on the left, and the one on the right, which is an edge. This was a ledge for the day, but remember what I've said about ledges. They're important when they have multiple hits, the overnight and the previous day. But this one was telling you that unless we got up here, it was suspect. And in fact, that turned out to be completely true. All right, let's find some other examples. Another perfect example of a range day. Strong energy down, open 5 had it, the open 60, the initial balance continued it until it reached an inflection point and the rest of the day was along. Okay. Oh, this is a really good one. This is one of the ones where you just have a one-sided day and you can just get in early and, you know, take the trade. But again, it was like that other day. Once the open initial balance, the opening 60 defined itself, the rest of the day, nobody was interested in pushing it. That's why I like to often trade the open 5 into that point. Because, you know, you can get here and say, wow, this is a perfect long, and then you just never get anything out of it. And that was that same example we had a couple days ago. Yeah, this one here, where it just, you know, never really got going. Let's see, let's find some others. The vast majority of days are going to look like this one here. So, you know, that's an example of a perfect range day, closed up near the highs. Here's another one, but that's a different kind of distribution. You know, just all selling. Let's go get some more days. And then we'll talk about this a little bit more and we'll take questions. And that's probably as far as we're going to go today. Okay. What's happening? My data usually comes up. There we go. Okay. Zoom is impacting my bandwidth, apparently. Okay, let's go back here. Ooh, this is an interesting one right here. This is a really cool example. You don't see these very often. This is an opening drive. And a lot of people use that term differently, but my example of an opening drive is simply if the opening 5, well, this wasn't exactly, if that open 5 was the low, this is an opening drive. Basically, it's close enough. I look for that to be just basically where the open 5 low it holds and it just continues to go up, albeit choppy the rest of the day. But look at how that range, you know, this is a more typical example of what happens at the top of the initial balance or the first hour high, which is if it does hold it, it usually gives you some more. And you know, you can see that here, it did that. Most of the time that's true. And that's why, you know, the days when you get It's just sitting up there at the open 5 or at the opening 60 initial balance high. You know, those can be really frustrating because it just never gets any traction. So let's see if we can find a true opening drive day, trend day. Probably not on this scale. I'll find one and share it in the group later. But what that looks like is just basically, whoops, when, you know, the open 5 never touches and then the open 5 becomes the, in other words, the open 5 is below and the opening 60 is above it and it just keeps going. That's what opening drive looks like. And that's a true trend day, and we just haven't had very many of them, so it's kind of hard to find examples, at least here. It's probably more examples over in oil. Okay, let's see. Let's go back into the questions and business plan stuff. When I consider upthrust, okay, Alessandro asked me this privately, but I'm going to share it. Upthrust, you know, and Wyckoff and Weiss have different answers to this question, Alessandro, but this is basically what he asked me, guys. I'm going to repeat it into the whole group here. And the answer is, you know, that's how I score it. You know, the more out of whack it is, the better. You know, it's like 10 to 1 is really good. You know, if it went up on 10,000 and then it bounced on 1,000, you know, then that's really good. You know, there's days it's 100 to 1, you know, but if it's close, then, you know, that's less important, but it doesn't mean it still won't work. You know, that's kind of my short answer to that. You know, you can get as much detail there as you want, but it probably won't make a better edge. Okay, let's see, other questions. Yeah, impatience will always get the best of you, David. That's why you need to figure out ways to manage that. Yeah, business plan, 1 year, 3 year, 5 year, and 10 year. I guess, Amy, in traditional business plans for normal businesses, and trading is far from a normal business, I would say that's true. I would have a 1 year, a 5 year, and then maybe as a venture capitalist, I would say a 1 year, a 5 year, and then an exit strategy. You know, if I can't cash out before 10 years, it's probably not something I'm interested in, at least not in this point in my life. But for trading, I think you should probably look at it from the following point of view. You should look at it as a newbie, and your business plan should be, it should have one objective, and that's to survive. I mean, literally, and survival means you grow your account equity without blowing your account up. That's all it means, you know, and so that should be your first year business plan, to survive. Your next chunk, whether it's 3 years or 5 years or whatever, should be to scale. Because if you've survived, then you should have enough meat on the bones of your personal process and your personal experience to start scaling. You know, and that could be as simple as going from, you know, 1 lots to 2 lots or 5 lots. And again, that's depends on your own personal risk and how much time you have and how good you are with, you know, adapting to your losses. And so, you know, that becomes a little more complicated, but the concept, I think, from my point of view, is really strict. Your first year should be to learn how to survive. And many of you are in year 15 and you're still learning how to survive, and that's fine. Don't feel like an idiot. You know, actually, that's the most common. If you talk to like Pete over at Jigsaw, he has the group therapy he does with people, and the vast majority of them come from that world. They've been trying to figure out a winning strategy with some portion of their, you know, their assets for, you know, 15, 20 years, 10 years. And, you know, they've had some things work and some things not, but they've just never made any real progress. And, you know, that's one of the beauties of order flow, is it can kind of get you right into a very quick, profitable strategy and process if you let it. You know, pick one good setup, HMOMO or the Open 5 or, you know, the springs and upthrust, whatever it is, and really just get good against executing on that thing in 1 or 2 instruments or one good set of correlated instruments like the indexes. And that's it. You know, so if you achieve that, think about it. Okay, let's say you do that with a $50,000 account, and you're like many of you guys, and you're trying to you know, to build up a couple $100 a day, you know, over time. Yeah, that's awesome, and that will get you at the end of 1 year to the next step. You know, now let's say you did that with Top Step. You know, you did a $50,000 account and you're trading, you know, 1s and 2 lots, which is what you should be doing in a $50,000 account. And you know, you're staying away from the losses. And you know, a year later, what's a good number? You know, 60,000. If your 50 is a 60, you did really well. And seriously, and that's the problem with that size account. You know, if you did really well, you made $10,000, and guess what? You're not going to live off of that. And if you spend any of it, then you're going to start all over again in year 2. Okay, is everybody hearing this? This is a really critical point about your business and scaling your business. On the other hand, if you go into that and you say, okay, I'm a $50,000 trader trading 1 lots for a year, and now I've done it for a year and I have $60,000 and a lot of confidence. Okay, now, first of all, I have a $10,000 buffer to work with. And number 2, I can start going up to scaling 2 lots and taking a little bit more risk, or 3 lots or whatever. And now maybe my goal for the next year is to make 30 or 40 grand, you know? And can I do that with that $50,000, $60,000 account? That would be really aggressive and you'd be taking a lot of risk. But with other people's money, could you then go up to $100,000 or $150,000 size account? By all means. And in fact, that is exactly the way you should be doing it, because now you've taken some profitability and you've increased your assets, increased your net worth a little bit, and now you can confidently go into scaling. And I really want you all to understand the next thing I'm going to say. You're starting over again. It's a completely different set of skills. You're taking the experience that you learned, and now you have to get really good at this thing of figuring out where you make your errors. Because if you scale and you make errors, they will double. And because of the nature of errors, wins, and losses, your drawdowns will take you out faster than your profit will take you up. That's just how the math works. So you'll lose your account. And I know many of you are familiar with that. What you need to do instead is move into it with the idea of, okay, now I'm a successful small trader and everything I do works reasonably well for that. And then maybe even go back out to the sim, you know, trade your real account with 1 lot and go out to the sim and start working with, you know, 4s or whatever, and really exaggerate your errors so you can really get a handle on what you're doing wrong. For example, if your mistake is that you consistently go and are profitable and small profits for weeks on end or days on end, and then you have 1 losing day that takes out more than 2 or 3 days of your average profits, then you're doing something wrong. You're probably taking losses that are too big, or you're putting on too much size, or you're giving trades too much room. It has to be one of those 3. But on the other hand, if you go into that and you've got that risk management skill just locked down, so you just do not lose money. Okay, now you're doing that 1 or 2 lots, so, you know, losing a couple $100 on a day would be a normal amount of risk for that. But you're going to double that. So now you've got to be able to think in terms of losing $500, $800 a day. Will that work in the risk model of the 50K account? No, because you have a $1,000 loss limit for the day and the week. 1 bad day and you're done. It's over. Save your $150 or whatever for a couple of months and do $150,000, except trade it the same way, and just give yourself more time, because that $100, $200, $300 a day will add up. I've shown you that. And yeah, you may not get the $9,000 goal in a month. It might take 3 months, but you will be that much farther along. And if you approach that rest of that year that way, so maybe it takes 3 months to get funded at that level, then you've got 9 months left to grow, but now you're growing at the scaled level. So let's go back and let's just use math. Let's just say, for argument's sake, you made $10,000 with a $50,000 account. That was an enormous, and that's in a year. That was you're a rock star, okay? Do the percentages there, guys. That is a rock star performance, okay? But you can't live on it. It's not enough money. So multiply by 3, okay? So now you've made $30,000 on your $150,000 account. Okay, you still are going to have trouble living on that, but your $150,000 account will scale a whole lot more than that once you learn how to scale. Okay, so I hope you understand that point. That is such a critical point in the business planning idea. And again, it's the test of reasonableness. You know, I can't tell you how many people I've debated with on the Top Step group, and they're saying to me, you know, I'm going to trade for a living with my $50,000 account. And I'm just like, you know, I wish I could buy LSD that could create hallucinations that good, because it's just not going to happen. You know, it just doesn't happen. You're dreaming, okay? And it's just because, go through the math. You know, if you truly are the exceptional trader who can come in and do a $50,000 combine, you know, and you're averaging $2,000 a day and you're having no losing days, all right, yeah, you could be the exception who could trade 5 lots. I could maybe do that scalping, but I wouldn't try because it would just be emotionally frustrating. And trust me, I have tried that. I told you I've done lots of combines. And one of the reasons I do them is just to get a handle on that kind of thinking and emotion, because it keeps me focused on my real stuff. And that's why I say over and over again, it's one of the best development labs I've ever found. And people always ask me, well, why don't you just do it in the sim in your own account? Well, because there's no accountability there. It's too easy for me to justify myself. But if I'm over in Top Step and I blow up a $3,000 loss limit and I have to pay $99 to start again, a couple of you said that's a lot of money. Yeah, it's a lot of money. No matter who you are, it's meaningful enough. So, I strongly suggest an approach somehow like that, if not, that approach. Okay, let's see. I'm looking growing a long-term wealth plan. Okay, Amy, that's a really good point, because that's how you get to the next question. Remember back up there you said, 1 year, 3 to 5, 10 years, and I'm trying to put that into 1 year to become competent. From that point on to scale, at least for the next couple of years, which gets to how do you make this a wealth plan? Okay. By the way, just got to ask, is this interesting? I mean, do you want to continue? Because I'll keep talking about this if you want. I'm just over the hour and a half I had planned, but I will continue this topic right here if you guys want to. Why is oil behaving crazy, Jerry? I don't know. I never care why. Maybe there was an inventory number. The question, never concern yourself with the whys. Concern yourself with the result. That's why. Inventory number. So is coming out today. People are trying to game it. Okay. All right, this is interesting. Cool. Okay. Brokers and frurus teach you that. I know they do. And this is why the conventional wisdom is totally wrong. Totally fucking wrong. That's a good place to use fucking. It doesn't mean there isn't wisdom in let your profits run. What it means is that that's not a trading edge. That's a furu line that, some guy will sell memberships to his group with 40 of those in a PDF that, my trading handbook for $67, my ebook, how many times have you seen that nonsense? That's what they're doing. They're just finding little concepts and trying to market them as trading edges, which they're not. So it's really important to have a strong sense of, the conventional wisdom is total bullshit. And yeah, this is an interesting momentum play here. The trouble with this kind of aggression in oil is it's really easy to get caught on the wrong side of it. And, so what you're looking through, I'm taking a segue off because this is an interesting behavior here, and let's just talk about it, even though it has nothing to do with our webinar. When you see a lot of energy like that in oil, that's price discovery, probably has something to do with the inventories. Maybe somebody's they believe they already know the number or something. Maybe they do know the number. The trouble with this is you need to see follow through with H momentum or else you're going to get caught. So for example, if we shorted this right now, odds are it's going to go against us pretty quickly. And that doesn't mean there isn't a good trade here, but you need to get a sense of the momentum over time, which is why I dragged this chart over here. And not just the fact that there was a sudden amount of down energy. See what exactly? Okay, this is exactly what I'm talking about. I mean, you would have just lost what, $80 on a one lot trying to join that down energy because it just really wasn't the down energy you thought it was. So, and gold's got a bid. So there could be something else going on. I don't know, with politics or whatever here. Yeah. Again, I strongly encourage you not to care why and just look at the action. But the moral of this story is when you get sudden momentum, don't just be in a hurry to join it, because often it will knee jerk like that. And when you start seeing price discovery that's more methodical, like moving up and then getting sold again, see what we're seeing here? That's why I said, this would have been a really good spot for that entry because it retested and there's your up thrust right there, okay? And then it, this is a very fast time frame here. Let's get the time chart over here too. Sorry for this segue, but he asked a question that was really pertinent, and I think it's good to just watch this because it's educational. But if it's distracting to the topic for you, just don't listen to me. Okay, see how what looked like the perfect short there is a trap, at least for the moment. This is a kind of a situation where a footprint chart is very useful. And when I get Ninja 8 up and running, I may put up a footprint on my 5-minute chart, just for that purpose instead of the candle. But that's really the only place I find footprints useful. You would have seen trap sellers down there. Any of you that are running a footprint for a fairly short time frame, like 30 seconds, if you could share it in the group later under intraday CL, I'd be real interested because I'd be willing to bet that there were some trap sellers down there and then we bounced and then the selling is resuming here. So. Anyway, all right, that's all I'll say about that. That was a good experience, example, which is why I grab them when I can. Trouble is I got to drag all my charts back and Zoom. Oh, so Zoom, they redid the dashboard completely to try to make it touch now, and they screwed it up even worse. But luckily I noticed it before the webinar started today, and I didn't have it impact you guys. All right, so anyway, footprints are volumetric bars on NinjaTrader 8. Okay, that's good to know. Okay, so let's get back to what we were just talking about with the business planning stuff, because that's a really good subject. Okay, so stay with, the math that we were on. So let's say, this is just a typical situation, and I'm just scribbling this down so I can keep the train of thought. So let's say you're this 50K trader, and you're doing ones and twos, whatever it is, small stuff, and you are so successful, you make 10K in a year. And, that's a nice 20% return. And, that's a rock star. So, that's what's called a test of reasonableness, guys. If you're thinking you're going to open a 50K account and make 10K a month, and I see people saying nonsense like that, like I said, I wish I could buy drugs that were that good. Okay, so now that's a really nice day, first year, and, your net profit for the first year is 10K, and you learned a lot, blah, blah, blah. Okay, now let's go to year two, and year two is, all right, let's do the same thing with 150K, and use the same 20% round number, or just multiply times 3, that works too. So now we have 30K, okay? So our second year, we had a 30K profit. Notice how we still can't live off this, and this is a world-class performance. Are you all hearing that? Yeah, I know that's exactly where you are, Amy. That's exactly where 3/4 of you are. And the other quarter of you would love to be there, and it's good because this is educational for when you do get there. And you were thinking that it worked the way that I told you was total nonsense, that you were going to get your 50K account and make a living. You're not. Okay, now, let's go. Oh, by the way, let me take one exception to that. You can do your 50K account and make a living if you operate like I did last year and the year before that. Drive Uber and make, $1,000 a weekend doing that, and, live really frugal. If you're living alone, rent a room in somebody's house, or, do a room in exchange for helping them with their yard work or whatever it is. I mean, the lower you can get your overhead, the better. Why? Because if 10 grand can actually cover most of your expenses, then you're in really good shape. Okay, because again, you got to think of this as a business, and your expenses are your living expenses. So until you got that covered, you can't even think about trading for a living. Okay, so now you're at year two and you made 30K, and again, that's year two of rock star performance, but you still can't do it for a living, but you can scale now. That's the beauty here, because under the 150K approach, and again, I'm just using these numbers for examples, under the 150K approach, your daily loss limit is $3,000, okay? And you shouldn't be anywhere near that. I mean, even with my most ridiculous sizing testing that I've been doing in gold, which is like, putting 10 lots on trading ranges, I only blew up that $3,000 if I totally let it get away from me. Because, again, think about it in gold, $10 a tick, 10 contracts, $100 a tick, getting to a $3,000 loss takes some extreme stupidity, right? Or just, really not admitting you're wrong. So, but in the scaling on the other direction, think about that. If you can just improve yourself a little bit, or come up with, for example, let's say you keep your scalping, and your scalping generated the 10K or the 30K, okay? And now in addition to scalping, you could scale your scalping up, so maybe your scalping will make, maybe just double it. Instead of scalping 1s and 2s, I'm gonna scalp 4s. That should work flawlessly, by the way, with scalping, because scalping, you're already managing the risk. So doubling your size, you should be fine. So now your 150K account, just on your scalping, is gonna make you 60K, and you could live off that. So can you make a living as a scalper with a 150K account? No question about it. It's not a great living, but you can survive. Now, if you can do that, okay, if you can scalp most of the time, then every now and then catch a setup like, we just saw over here with this, where the first hour high was the high of the day, like that one. Let's say you can scalp and make your, your nice 60K a day or 60K a year, with 5 lots or whatever, 6 lots, 4 lots, that's reasonable, by the way. That is totally reasonable for scalping if your risk management's good. And you're experienced enough to scale. Again, remember, that's the guy who went through a year of 1 lots, okay? But now, then you see a setup like this guy right here, okay? And you can say to yourself, well, heck, I'm already going to make my money for the day. I'll just throw one lot on up there, at 3150, which has been an inflection point for months. All right. And when we get our spring, all right, it's one, I'll double it. Or I'll make it a 3 lot. Okay. It's still profitable. Remember, I showed you how the math of adding to a winner, when you have that clear of a risk point, can work. And anyway, I'll let you guys do the calculations yourself. But, if you did a 3 or 4 lot and just captured even a third of this move, just take 31, 32, subtract 32 from 50, and then take that number of points, and then, figure out a little bit of scaling in there. You could easily take your normal daily number and double it just with that one trade. You see where I'm coming from? I took virtually no risk. I'm not deviating from my normal bread and butter income, but instead of making, my normal, whatever that is at that 60K rate, 500 a day, 600 a day, whatever I'm thinking there, 200 a day. Instead of that, I threw on one trade that doubled that with no risk. And I was smart enough to see that adding to a winner like that would have continued to work. Okay. Then you are now in a position where you're going to start having $200,000, $300,000 years, because it only takes a couple of those. And this is where that conventional wisdom comes along, where you hear people say, John Grady says this all the time. He says, most traders do not make a living grinding it out day to day. And I say to John Grady, sorry, John, you're wrong. Maybe the prop firm you worked at, maybe at SMB in equities, but I tell you what, in every prop firm and every individual trader I know, they have bread and butter that they live on, and the home runs are their wealth management. According to John, and again, I'm not saying he's wrong, it's just this is opinion. My experience is totally different. His experience is that most days you don't make or lose anything, and then every now and then you have a really big winner day. Hey, if you can make that work, great. I think that's the wrong way to do it. John's a very respected, successful trader. But, again, this is where one respected, successful, experienced trader can disagree with another. It's just two different ways of making money out of the same group of situations. He also trades the treasuries, which tend to trend much stronger. So you could make that argument. But trends like watching grass grow, I mean, yeah, it trends, but you got to stare at it for a week to see the trend. I can't do that. Okay, so Amy, that's the answer to your question. So now let's say you have finished year 3 and you have successfully scaled. You're still trading $150,000 account, but now you're at that level that you all believed you might be able to, and you're in $100,000 year isn't unreasonable there. And I'm telling you, it's not. It passes the test of reasonableness if, you think about it in terms of, okay, 100 grand, it's like 10 grand, round numbers totally, 10 grand a month, so I'm making what, 2,500 a week. Yeah, I could scalp that. So that's totally doable. And then, well, wait a minute, what about these home runs? If I could hit one of those now and then, I ought to be able to make 200,000-300,000 in a year. Yeah, with 150, all that passes the test of reasonableness. But you're still only making 6 figures. And I know there's a couple of you saying, yeah, that'll be fine. I'll take 6 figures. Okay. Well, guess what, guys? The more you make, the zeros get bigger, but you'll realize that, if you're one of those people whose cost of living goes up and you buy a fancier house and all that, you're not going to be happy. At least I wasn't. But what you'll learn is that, you get to the point where you're free and you can do whatever you want. That's really the value of the money, and it's freedom. And the more you display it, the less freedom you'll have. So, as you get richer, I suggest that you hide it more and more, because the people that, if you hang out with the people that display wealth, you're always going to be doing the wrong things. If you hang out with the people that are just successful and don't care if you know it or not, you're going to tend to always be on the right side of most equations. Again, remember that other Jeffism and, AAism, recoveryism. What other people think of me is none of my business. I don't give a shit. All I care about is making my shit work. And if you and I can somehow end up on a friendship with your shit and my shit intersecting to mutual shit, then, we have something in common, and let's go for it. And that's what we're all doing in this group. Yep, the millionaire next door, and I know a lot of them. But I'll tell you what, I grew up in Palos Verdes, Amy, and if you know anything about California, this is nouveau riche central. It makes Beverly Hills look poor. And, a lot of people were really successful instant money. And my high school classmates got Porsches for their birthdays. And my father thought that was just ridiculously stupid. He said, you want to buy a car? Get a job, save your money. And so, Anyway, I'm just rearranging my windows here. Bear with me for a second. I had stretched them out. So anyway, let's go on to the next level. So how do you get to actual wealth doing this? That's hard. You have to build one of two things. There's a really good book out there called, shoot, what the heck is it called? It was about this kid that traded penny stocks for a couple $1 million, and then he tried to go get funded and he couldn't. I forget what it's called. It's like it's in my other room somewhere. I'll go get it. But anyway, my point about this is attracting other money as a trader, attracting true other people's money beyond the idea of, what Top Step does. That's really, there's two ways to get to wealth as a trader. One way is to just be really consistent over a period of years. Think about it. If you're making 100 grand a year and every now and then you have a $300,000-$400,000 a year and you save your money and you don't, live stupid, you're going to have a real nice nest egg in 10 years, and if you just keep doing that, I don't believe in retirement. I will trade till I die. But, again, from experience, and I don't know anybody not facing this who's, approaching my age, you're going to start to get to the point where your health's going to impact your ability to do it. And, and you're going to start taking care of your parents and, all this stuff. So, it's going to ebb and flow. Your money's going to go up and down. And so one way that a lot of people try to get to the next step is by becoming a registered advisor and literally, having a fund, or become a hedge fund, or, there's a number of ways. And that's harder than you think, and you'll need a longer track record than you think. Okay, but it is the true path to wealth. Okay, so, for someone like you, Amy, your age and, your circumstances, a really good way, and this applies to most of you, by the way, you're all pretty similar. No, I would not get a Series 7. No, you're misunderstanding what I'm saying. That's a broker's license. That's useless. No, and you don't need a Series 7 to run a hedge fund. You don't need any licenses. You just need to make a fund. So again, I don't want to go into this in a lot of detail. I'll be happy to talk to everybody about that as much as they want, but not so much in this session. But there's basically, you don't want to be a broker, okay? You can be a registered investment advisor and manage other people's money, but you have to do it under really strict rules. And you're not going to be able to trade futures doing that. That's for people that like manage retirement accounts. So the simplest way to do it is become a hedge fund. That's what I am. And because a hedge fund's allowed to do whatever it wants, as long as the principals agree to do it, that's what it does, and some private equity investors invest in hedge funds, which is where I'm going. If you're going to truly do this as a professional, you need to become a hedge fund. And there's a few ways to do that. If you're a successful trader with Top Step for 3 years, at 6 figures, there's plenty of guys there that can have that conversation with you, and I could introduce you to them if you don't know them. But there's a lot of people that will help you in this path. But basically, what you're looking to do, is accumulate other people's money and your money, and kind of put it all together in a predefined, kind of package, like I do with my setups. You say, okay, here's what we're going to trade, and here's the risk management we're going to do, but you really define it clearly, and then you give somebody, one person or a group of people, the right to actually trade it. And yeah, the advantage you get out of this is threefold, Amy. It's not just that you can size up more. Let's just do a simple example. Let's say you have a really tiny fund, and a really tiny fund is $10 million, believe it or not. And a more typical small fund might be 50 million. But let's just use 10 million as an example. You would typically get a fee for managing that, just for being the guy that's the general manager, and it's usually a couple percent. And the taxation in the United States massively works in your favor, because that particular piece is taxed at something called carried interest. And I've explained this in the chat in Slack a little bit, but basically the absolute most you can pay in taxes is 15%. And if you're clever, you can pay much less than that. So it basically gives you a legal structure to trade other people's money, and that's what you will need. But I'll tell you this, just to organize the LLC that the fund will cost you $2,000 or $3,000 in legal fees. And then, to meet with the investors and, put together a prospectus and, do the legal work, that will require, the new laws have made this a lot easier. You can now raise money without having qualified millionaire investors like you used to have. And that's true. Funds used to have to prove how much money you were worth to invest in these kind of funds. That's not true anymore, but there's still a lot of legalities. So your cellmate says you don't need to pay any tax. Yeah. The trick to not paying taxes is to use interlocking LLCs in multiple jurisdictions. That's the long answer, or short answer, John, to that. There's no legal problem if your legal jurisdiction overlaps. For example, my main fund is in Hong Kong. The partners in that fund are 3 other funds that are located in 2 European countries and in the United States. The fund in the United States is owned by 3 other funds that are in 4 other countries that I haven't mentioned yet. So that's the point. And it's just, you build yourself a little legal mess, but it's actually fairly easy to manage if you're if you're involved. And the reason you do it is because you can play, you know, the game that Apple plays with their profits. Oh, if I leave my profits in Ireland, I don't pay any taxes. Well, you can do very similar things to that. And you know, if you watch that movie Lemonade that's on Netflix about the you know, all the money being hidden in the islands, that's what they're talking. That's it. The IRA can't, or the IRS can't mess with you because they don't have the jurisdiction, David. I said that to somebody in the Rich Traders group, in Steve Burns' group. He said, you know, you should work on creating passive income. And I said, passive income is bullshit. There's no such thing. There's just different levels of active income. And so some guy comes back to me with the IRS definition of passive income. And I said, that only applies if you're taxed in the jurisdiction of the IRS. And if you're smart, you're not. No, that's totally not true, Amy. I have advanced degrees in economics and business, and I have played this game for decades, and it is not subject to that wealth taxation. That is net worth taxation, and that is the kind of shit that Fox News perpetuates, and it is just not true. And I will leave that there, Amy. You should do more research. You are stating something that is just categorically false. Okay. I'm a proponent of the wealth tax, as many wealthy people are, like Bill Gates and like Warren Buffett. Taxes suck, but certain kinds are necessary. Just look at, I'll give you one good example. I grew up with a lot of rich people who inherited their money, as I mentioned, in Palos Verdes. And I don't know collectively a stupider group of people or less successful group of people, except in their own minds, than my trust fund college or high school classmates. You know, some of them think they are so smart just because they inherited $10 million and now they have $11 million 40 years later. And it's just mind-boggling how disconnected they are from reality. So that's all I will say. There's a really good reason to tax wealth between generations. Okay, let's see, off topic. Can I give you an UpT or Spring example you could use today? Yeah, I'll do that in a second. Okay, any other questions or comments about the business plan stuff? By the way, Amy, without being political, that's a really good example of the type of bias that I spoke about earlier with the lady that I was coaching that was very, very Christian. Being very, very politically conservative or liberal with respect to your business decisions is a really stupid thing to do, because you're using a dogma that doesn't apply to trading. It's, you know, you can't pray to God for profits. But this woman is convinced that she could do that because she's just, God is so important to her. And yes, you need to be able to compartmentalize. And when I say that to her, her reaction was, no, God isn't, you see where I'm going? It's just, if your dogma is just so deep, you will never succeed at anything that violates that dogma. And that's the problem I have with any organized religions or thought processes. I mean, you know, just again for background, culturally and by birth, I'm Jewish, but I don't practice Judaism and I don't have much to do with it other than that. And because I'm not religious, I practice a form of Taoism, which is Asian. And it's a philosophical approach to life, not a higher power approach to life. And it just works better for me. Do what works for you, but don't confuse it with trading and trading decisions is the message there. Okay. Yeah, well, the only people that are religious that are rich are the guys that run those stupid churches, right? You know, and send me your money and God will make you rich. That's called prosperity evangelism, and they're the worst ones. I mean, they're just criminals, you know, like that Joel guy. And God, these people, the creepiness just crawls out of them, you know, and boy, if any of you support those people, leave my group immediately because I don't respect you. Okay, so let's go back to Spring's enough for us, and let's go back and look at our agenda. And, you know, sometimes I love to just talk and share experience with you guys, and where it's useful, I'll be happy to do it, but I also have a habit of just talking forever. So Oh, let's see, meetings. I just want to, okay, so, again, I always like to go back to our agenda topic and trading the open, we kind of walked away from that and putting it all together and focused on that. I'm going to come back and show you some more examples of springs and up thrusts in a second. But the real idea here that I want to make sure you leave with was what we were talking about with integrating the open 5 to the first hour high and low, and how all of the setups consolidate that way. That one that we were looking at that was just such a perfect example of a first hour high that also happened to have a spring up thrust configuration that was an up thrust, and that confirmed the entry. And not only did it do it, but it confirmed it at a point where literally that high of the day, there was no risk. And how often do you get that setup, guys, where you have a first hour high that has up thrusted and has no risk because the stop is 3 ticks away. You can see it. It's right there. There's no question where you're wrong. I mean, that's the kind of setup that once you're experienced enough to feel that and see it, and you've got your top step, $150,000 account, you throw your 15 lot on there because you might make 150 grand on that one trade. But until you have that level of discipline and skill, it's not likely to happen. So that's what this was really about today. And the more time we spend on it over the next few weeks, and this worked out perfectly so far because we're kind of wrapping up the setups and we still have 3 weeks to go, and that's what I was trying to do. So we could spend more time really putting it into context like this. Okay, now let's just grab a random chart. For springs and up thrust, the best chart to use is a 5-minute, just because they're the most visible there, but make sure you understand what I'm about to say about them. Springs and up thrusts occur on every single time frame. Pick a time frame and use that one to trade springs and up thrusts. So, for example, by the way, today, look at that. I mean, that is exactly what happened that 2 or 3 days ago that I showed you. I mean, it's right here. I mean, that was the high of the day. It was the first hour high. It's an edge, but it's probably not a ledge. Yep, see, it failed that same spot again. So you could have got short here, and my God, you had no risk as long as you didn't get stupid. Now, let's look at that same one in the ES just for fun. And then I'll show you some more examples of springs up. Jesus. All right, let's zoom in on today just because it's perfect. So I'm going to show you today on a 1 minute just so you can see. Today was a perfect example of the integration of the 3 yet again, and I was talking what was happening, which was perfect. Okay. All right, guys, this is literally the summary of this whole session right here. And it's a perfect example, and we just watched it happen today. It was a perfect up thrust. I'm just waiting for my chart to come up so I can show it to you. Okay, there it is. All righty. I mean, it just doesn't get better. I mean, this was the one that failed before. Remember, if you go back here, so we have a precedent that's perfect, and it got up there, and I mean, to the tick, the first hour high. I mean, right there, and gosh, I got to just look. So that's 43. I just got to look at the action up there. Oh, it's perfect. Okay, look at this, guys. So we got up to there and 500 contracts traded. That was it. I mean, it was so clearly exhaustion and the edge that it just doesn't get better than that. This is the best example we've ever had since the workshop started. And so that was the top first hour high. You could have shorted that and that wouldn't have been stupid, but the trade, the true entrance to the trade was right here on this up thrust. Now, somebody asked me earlier, what's a good ratio? How's almost 10 to 1? Does that work for you? I mean, it literally, guys, I'm laughing because it just doesn't get better than this. You have the open 5 that was, kind of choppy, and it consolidated, which formed the first hour low, as a matter of fact. So we basically have a range day. It got to the top of the range, which happened to be the top of the first hour. And then everybody said, okay, we're done. And they sold it. And now the rest of the day, it's just going to work the range. Unless we get some news or something to push it out. Just a perfect example. Cool, yeah, no, it was there, and I'm teaching, so I can't watch everything going on. Yeah, Phil did, right. I saw the little memo come up that somebody posted an image. So, and by the way, your exit should have been, maybe here you could have exited and re-entered, or you could have, taken a little off depending if you had more on. You could have exited completely and then re-entered right here on that up thrust. That would have been intelligent. And then by no means should you still be in this trade. It ended at the first hour low. And that's, again, as a target, that was a beautiful target, because odds are it was going to bounce. If it didn't bounce, and sometimes it head fakes or goes through by a little bit just to shake out people. But that was a perfect example. That is algorithm behavior right there, where you see a first hour low that gets tested back and forth on a couple of bars both ways. That algorithms love to do that at the edges, because think about it. If you're trading algorithms, and you're trading algorithms with a lot of cash, so you've got an algorithm that plays 100 lots at an edge, and there's a couple of them I've seen. So I don't know whose they are, but I've seen them happening. Yep, there's Phil's posting that. Thank you, Phil, but also you should be paying attention to the webinar. Okay, anyway, so that there are algorithms that like to work that, which is why I never think of a price point. It's always got to be a little range, because you'll get that little head fake jiggle. This one was really clear, which is much more common at the open, because everybody's trying to get their positions on, and so the turns will be much more radical. But later on in the day, you'll see a lot less decision at the turns, because people are trying to game it. That's literally what's happening. And it makes sense. I mean, I try to game it too. So God, that is just a perfect example of an up thrust. Let's find some springs. Okay. Oh, there's one right there. Typically you see springs at the top of the open 5. So basically I need to get in here closer. You know what? Let me put this back to 5 minutes and go get my 30-second chart. And these are good questions and good examples. So again, since the day is choppy and I'm not trading it anyway, and you guys are asking good questions, and this is pertinent, apropos your business plans, then I'm going to continue doing this, and we'll just keep looking for examples. Okay, so good. I had an up thrust, but I don't like the one that I had, so I'm going to put the indexes back. They tend to be more interesting to look at in oil because it does them fairly radically. Okay, yeah, they're all over the place here. All right, this is often a good way to find them. Take the structure of the 5-minute chart, or if you have a footprint, it's useful. And that, again, is something I will change in Ninja 8. These won't be candles, they'll be small footprints. Anyway, if we take this down, let's just take it down to a minute. That's on any time frame smaller than that, they will happen too fast. And they'll end up really being more scalps. Okay, so yeah, let's see if we can find something here. And by the way, I'm literally just scanning for the pattern with my eyes and trying to see if I can see some real good examples. Okay, yeah, here's one right here. This is a perfect example of a spring. And like I said, it's very common, particularly in oil, that you'll see them as initiate, off the high or the low of the open 5, or, the same thing with the first hour high and low. So let's go here. All right, so, let's say you were trading oil on this particular day, and okay, let's just look at the opening 5 behavior. Again, you kind of want to look at it as you would have seen it unfold. I do not believe in replay, guys, but if you find it useful oh, thank you, John. That is that you just made my day saying that. And that's why I'm not doing a trading room. Because trading rooms sell you on, conventional wisdom that some guy's repackaging to try to determine monetary value. Okay, so notice how, again, your first eyeball here should always be on, the rectangle of consolidation. And, it's clearly here. You can kind of pick any place you want, but, my view is, hang a second. My view is the best way to do it is just look to the left. So I start on the right. And remember, I'm trying to predict what's going to happen further to the right, which hasn't happened yet. And I'm looking at history, which is not going to predict it, but it might give me some pieces of an edge. So right now, we've got a choppy range, and ignore this thing altogether. Oil does that a lot. Those generally aren't tradable unless you're already in them, by the way. Sometimes you can fade them, but you should try fading here is safer, not here, because that could just go and disappear onto my top monitor. So over here, all right, so this is the open, and we can see there's definitely some down energy, but there's certainly some inflection points that we would expect it to test. And you can see why there's down energy because, you know, it was the top of the range when we opened. All right, this all makes sense. Now let's kind of scroll. Okay. What does this tell you right here? It tells you that that is exactly what happened. You know, if the only thing happening here was they were selling this and buying this, then that right there is useful information now. So, you know, this is kind of like trading the open in hindsight, you know, which has limited value, but it has value. Okay, so now let's just let this kind of scratch out a little bit. Okay, there's the bottom of the first hour. So, and this is very typical. Remember how the open 5 will kind of expand into the first hour, but not a lot of energy? That's what Lee was saying. You know, it's just more time, more information, but they haven't really changed their opinions, is the way you read that, okay? And why would you? I mean, imagine, again, always put yourself on the other side. We're looking at this from the perspective of somebody who does not have a trade on, but it's just as useful to say, okay, I'm long here. Would I enter this long here? Boy, the potential that this is an up thrust is significant. So no, this isn't a really pretty long right now. I mean, that's why. I mean, the area that's the target's right above me and it's only 3 ticks away. So, excuse me, 13 ticks away. It's still not interesting structurally. Okay, this is more interesting because we got up here and we're holding, and that's the open 5. Remember, that's already given us that data point as, you know, people are putting their lines in the sand and kind of stating their intentions for the day, but we've gotten an open 60, an initial bounce low, and we did it on relatively low volume with buying energy. So that's telling you right now that you should be suspicious of shorting this, unlike here when you should be very suspicious of being long, but a short looks like it might be coming up, right? Now, right here is when your opinion should start changing. Why? It's really simple. This consolidation that we broke down from and this consolidation down here that we came off of is happening again right there. Whenever you see a whole bunch of bars glued together sideways, that's a consolidation. Consolidations tell you 2 things. Number 1, tells you not to take a position because you don't know which way it's going to go yet. And the second thing it tells you is just by definition, the break out of a consolidation will be aggressive. And again, just think about it. Anybody in this trade short will leave quickly if we go long. Anybody in this trade long will stay long if we go up and maybe even add to it. So if we go up, we're going to do it aggressively. Conversely, if you're long and it goes down, you're going to stop out. So you're going to get out of your trade. Conversely, if you were looking at this as a short, you're going to add to your position. So either way this trade unfolds, it's going to do it aggressively. That is also sometimes referred to as a wedge, you know, and what people are talking about when they say that, you know, just draw 2 lines. I don't know if I can draw it. Yeah, I mean, just, you know, that's what oh shit. Well, basically just draw a line here and a line here, 2 trend lines that form a triangle or point, and that's a wedge, and that's also consolidation. So this is just a tiny little one within this larger one. Now, right in here, first of all, if you're short, you should have been gone already, okay, because it's telling you that you're wrong. Okay, you see all the reasons you're wrong, and the only reason you would still be in this if you were short is if you were trying to add to it to average in, which would be the stupid mistake, or if you were just, you know, oh, I'm certain it's going to go down from here because of this, or some, you know, stupid human behavior that had nothing to do with an edge. Now, right there, okay. See that, what happened? Okay, I can't even get it to, there, okay. That right there was your warning. So you had a spring right here, okay? We're moving up strongly. We hold, we pull back, but the pullback is so insignificant it barely registers. Okay, that right there is your entry for the spring. Any one of these bars, but the point is if you weren't in when this one started, you would have ended up FOMOing and chasing this trade. Because look what happened. Remember what I said, that it will leave that area aggressively. Particularly if you can throw in 2 other setup criteria like the top of the open 5 and the fact that that's the top of the first hour and that we bounced off the first hour low. Remember again that double breaks are really rare. So here's the low, here's the high. This is a break, a single break. Those are common. If it did that and then reversed back down and broke the low again, that would be really uncommon. Double break days are like less than 5%, like 3%. It's just really uncommon. 2 or 3 out of 100. So when you see that structure forming, you kind of have to get in right away. And again, on a 1-minute chart, it's a little hard, which is why I run the tick charts and the 30-second chart. But your perfect entry was right here at 58.95. Basically, it's the bottom of that range, and it's already proven that it's going to blow through there. All you have to do is see the volume. This is equivalent with these volumes. This 700 is not even, it's not even a rounding error. So it's just telling you that that's going to happen. And that's exactly the title of the book. That's why Weiss says that if you can learn to trade springs and upthrusts, it's trades that are about to happen, because that is exactly what they do. Okay. That's all there is to it. That's a spring and an upthrust. Okay, wouldn't today be kind of like yesterday with how the first hour and 5-minute range forms? Are you talking about oil, or what instrument are you talking about, David? NQ. Okay. You're young, and I'm gonna let you learn from experience. But if we're doing a CL example, just to be clear, you're going on a bit of a tangent, but it could be a good one. But make sure you're clear in your question. So how would that apply to what happened with the ES today with respect to that, or the NQ? So let me put this back to where it was, and then I'll go look at that for you. Okay. Okay, you're talking about this one here? Well, that was just a really clear up thrust there. We already talked about that one, only we use the ES, I think. But are you saying this one down here, is that a spring? Yes. The trouble with that spring, and this is, springs, advanced springs, is that it's in a downtrend. And one of the points that Wyckoff and Weiss both made, but Weiss emphasizes it, is that you want the spring to be in the direction of the immediate trend. And the immediate trend here was down. So that's a reversal more than a spring. But yes, technically, again, this is all time frame dependent. So, if I went down to a real short time frame, a minute might not do it, but let's see. And that's why it's so important, if you're going to trade springs and upthrust, to just pick a time frame. Doesn't matter what, but you got to pick one. Okay, see on here, clearly upthrust. This invalidated that upthrust. So this took us back to consolidation. And, I wouldn't call this anything here. And so, you basically have a downtrend that reversed back up to consolidation. So no, I would not call that a spring. Yeah, if I zoomed into the 30-second chart, that was probably a spring on. Yeah, it was a spring right there on the 30-second chart, but again, pick a time frame. You can't try to do this across time frames because you're going to get conflicting answers. I hope that made sense. Okay, I'm doing housekeeping here again while you guys have the opportunity to post more questions. Good. See that, that should be an important thing to yourself, David, that I kind of had that idea. Yeah, that's what the first year feels like. And no, that's accurate. That's totally accurate. And that's why I said, yeah, and that's another thing, Jerry, that'll happen. You'll kind of notice a pattern. You won't know what it's called, but it doesn't matter what it's called. That's why I keep saying, forget absorption and unfinished auctions and all this other stuff. Forget what the shit's called. Just learn to recognize executable patterns, edges. That's all you're looking for. So, and again, if you remember in the last session, I said that, the test of reasonableness, one of those tests of reasonableness criteria was time frame. I hope I've really slapped some of you in the face, and with the idea that you're going to trade one lots for a year and you might make 10 grand and you'll be a rock star if you do that, and that's going to be really frustrating if you think you're going to get rich quick. But if you do the model that I explained, with starting with 50K one lots, and then go up to 150K, and again, just using those as examples, and maybe double it or triple it, and then learn to scale, and then maybe take some risk, some focused risk on some bigger trades with with some size. Yeah, then going into year 3 to 5, you should be able to make a nice 6-figure living doing this. So those are reasonable expectations. And then at that point, it's a good time to have a conversation about whether you might want to do a hedge fund or, organize some LLCs or something like that. Until you get to that point, you really don't need to worry about that stuff because all of the tax and legal implications don't apply because you're not rich enough yet. I mean, I'm sorry, but that's just the way it is. And rich is the wrong word. You're just not important enough. So, you can't afford to hire the help you need. And, to set up a tax structure like that, you really got to know what you're doing. So you can either do it yourself and learn, or you can hire someone, and you're just not there yet. So good, good, Amy, because it should be giving you encouragement. The people that go into this thinking, that they're going to go from, the combine to funded to profitable to trading for a living, in their first year or 18 months. By the way, that's the most common belief. That's what, if you talk to the traders in that group and ones that get funded, and Mike and his team do this all the time. And that's why they constantly go back and try to get people to have realistic expectations, because those are not realistic. And you know what? There's a really good example, John, what you just said about six-figure Amy. That's what Linda Rasky was talking about, no electricity for the queen after 10 p.m., because her husband would come in and say, come on, honey, come to bed. 1 minute, I just want to finish this last chart. I'm sure all of you can identify with that. So they literally set a timer on their electrical system. All the devices go off at 10 o'clock, no exceptions. That's just it. So that might be a way of doing that for yourself, is to go back and say, six-figure Amy business plan is the following, And then literally, game it out, make spreadsheets month by month, put the expenses, for your living, your rent, your food, put all that crap in there so you can find where the mistakes are and find where, your thinking just isn't making sense. It's really, really important to do that. And that's why, this whole concept of business planning, excuse me, sorry, burp while talking. Don't recommend that while you're doing a webinar. That's why that business planning concept is so important. It's your way to take a step out of your role as your employee and put yourself into your role as the general manager. And the easiest way to think about that, if you haven't had enough experience in business to actually understand what I mean by that. If you've been an employee in any hourly job, you get it. Just think about yourself and your boss. But for some reason you've been lucky enough to never deal with that, just look at it around you. For Darren, I know he gets this, but Darren could, just look at the pharmacy techs who work for him. That's a really good example. And, their lives are hell, but that's considered a good job. And that's the problem. Jobs are like that, and it's getting worse. When I started my career, I left college and went to work for IBM with a $30,000 salary in 1980, which is a lot of money. But that wasn't the upside. The upside was I went on commission a year later and I saw mainframes. I made $500,000 my second year. And, that doesn't exist anymore. There just aren't any corporations like that unless you're a rock star developer and, you get hired by Google or Facebook or whatever, and you get equity. And, that's just not reasonable for the vast majority of people on the planet. So you got to find another way. And if you're going to do it with trading, the business plan that I just went through is the style I would take. And obviously there's other pieces to it. There's what instruments are you going to do that with? What times of the day? And that's about your process development. I showed you guys, I consistently make the same error, particularly in gold, when I do this tight range trade. And I'm getting everything right, but the only thing I'm doing wrong is I'm getting overconfident that it's working based on its early behavior. And because the way I'm doing that range trade is really more of a scalp wait than a scalp, and ranges are like that, sometimes you got to give them more time, then truly the only mistake I can make is being too big. So my way of handling that, and you've seen me do it for months and post in Top Step, is I go back and I start doing it with one lots until I'm sure I've got it right. And I have that done in gold. The trouble I'm having is figuring out the scaling, and what it looks like the best numbers are is to go in with somewhere between 2 to 4 and just leave them, because it works out really nicely with that amount. And that, for my risk profile, works. That way I don't have that $500 loss. That trade that I stopped out on would have lost about a third of that, which would have been totally acceptable. 500 was acceptable, but not to me. I want a loss to be 150, and I want a winner to be $3,000. That's the way I want it to look. Not that ratio is important. Again, that's how Jeff's head works, and yours should too. Okay. Yeah. Oh, yeah. You know what? That's true. That's true, Pavel. That was the way they kind of framed it. Linda's a really interesting lady. If you ever have a chance to meet her or go to any of her webinars or any of the trade conventions, she's a lot of fun. She's very extroverted and has lots of great stories. And so one of the ways I implemented what she suggested is, like my HMOMO and my, terror. That's a really good way of emphasizing that an error is significant, is to call it the terror. It just, people immediately get it, and I do too. So my terror in range is too big. So next time I go in to make a gold range trade, the first thing I'm going to think about when I go to click on that button is, oh, wait a minute, the mistake I make is too much size. All right, let's do this with 2 instead of 4 and see what happens. That's what I'm going to do. Hey, you know what? I share everything so you can steal it. Trader PD, that's the whole point. I'm not Mr. Proprietary. If you want to use my process, you have to license it. That's nonsense. The point I'm making here is you should all be stealing from me. And I don't have any problem with people that are copying my processes as long as it's working for you, or making your own, or making them, flows. I made another thing that I mentioned that I was working on for you guys. Shoot, you know what? Can you all hold on just 1 second? I'm going to scan something, so I don't. If I take a picture of it, you won't be able to see it. I will be right back. Do not leave. This will be interesting, I think. Okay, give me a second. I'm scanning right now. Yeah, you know what? I think you guys can create channels. If you can't, Amy, just remind me and I will do it. Oh, I'm running on, for a guy who literally, I have the title with Microsoft of Windows Guru. I'm that good at Windows. That is literally was my job title there. But when you're going back and forth between Windows 7 and Windows 10, it can be really hard, even though I used to teach Windows 10. Okay, JPEG, I want this to be a ping. And black and white. Okay, give me 2 seconds here. It's got to wake up the printer, so it'll take a second. There it goes. Okay. Alrighty, and there's the item. Okay. All right. So this is the thing I told you I wanted to share with you, and let me just make it readable. Okay, Jeff's writing is really hard to read, but I will share this in the group also. But this is the thing I'm building, and I wanted you to see that there were still times that that I will do a little mini flowchart, like this exact example that I was trying to show you with gold and the sizing problem. So what I do is, sometimes I take my process and I just put it into a step-by-step for the purpose of solving a specific problem. And that's what I was doing here. So, and some of this I adopted into my process altogether. Like I put competent and humble back together. They used to be, by the way. And I aggregated this, but what's important is the flow I got out of that. Okay, so that's always the given, particularly if you have chronic pain or a baby, or just plug in whatever's wrong with your life there. Okay, Alzheimer's, mother, anything. Okay, so the next thing is really important, is the context. Again, the 5 minutes of context, remember? So for this particular problem, I went back to that. And yeah, my writing's hard to read, but what this says is context. And these are the 3 pillars that Axia use. And in this example, I really like this. So the tech picture, the intraday auction structure, and the order flow of the moment. That's what you're evaluating, those 3 things. And again, I put that back into my process right here. The zoom out technical picture, the auction structure, intraday, that means that, and the order flow. Again, and when I mean order flow there, I mean the very fastest dome tick by tick order flow. That's what I'm talking about. And so then within that, ES, NQ, YM, and RT are evaluated all together. And then GC and CL are separate, because they're different markets. And what I've determined here, and again, the context of this, guys, is Jeff is building a business plan for a $2 million 2020 doing $10,000 a day. That is what I'm working on. And that's about as challenging a project as you can get, no matter how good you are and how many years you've been doing this. That's pretty challenging. I'm sure Lee would agree with me. So what I've done in that is that for the purposes of gold and oil, that the only thing I really want to play is high Momo, because those always work well there, and small ranges, but they have to be with low size. And I put a box around this because this is really the priority to play those. I will do this too. It's the second priority, and I'm not going to do any other setups there, okay, for this 10K, because it's too risky. I can't shoot for 10K days if I'm trying to do some of the other setups in gold and oil because of their commodityness. And I already explained what that meant. You know, they can have sudden moves because of somebody doing something that is not related to the futures market, you know, like an airline, you know, buying oil futures to lock in their oil price or whatever. Okay, then the next thing, again, this context, I want to know what chop there is, what correlation, if any, among the correlated instruments, how volatile we are with what kind of volume. That's different than chop, if you think about it. What are the internals? Remember, I told you I use that as a filter. I still do. And for this kind of level of trading, I will. So, you know, today, the internals are flat. You know, there's just not high, not low. We're just meandering along with no bias. You know, if you look at a heat map, you'll see the same thing. You know, mixed. I call this rainbow. When you hear me say, you know, rainbow tape, rainbow flop, there's lots of green, there's lots of red, which is meaningless. You can't conclude anything from rainbow. So that's what we're seeing there. And then are there any gaps and sweeps? You know what a gap is? A sweep is just when somebody's taking out multiple levels of prices on the dome in that instrument. And it's more rare in ES, but it does happen during price discovery. And it's a key component to the context, because if there's sweeps, that creates risk. So I have to be mindful of them. And, you know, one sweep isn't a worry, but if there's an environment of sweeps, which you see a lot in price discovery, then you got to be really careful how you play it. So that's why that's there. Okay, and then this is another thing that Darren and I have been talking a lot about in the Slack, is this idea of the overnight versus the regular trading hours. You know, it's different criteria. It has to be, because the volume's different and all that. So again, my way of gaming that down into my process for 10K a day is, in the overnights, I'm only going to take extremes of the profiles, nothing anywhere resembling the middle or high momentum, period. There's just no exceptions to that. And I'm only going to do it on low size. So, you know, I'm going to look for trades that are at the boundaries. You know, so if I was looking at gold or oil, you know, I want to be looking up here for shorts. I want to be looking down here for longs, or, you know, here at least, not in a real minimum, in a real middle. And I want to try to capture momentum, because, you know, that's the place that I typically make money. So, you know, go with what works, right? Keep track of it. All right, so that's a way of filtering the overnight so that I don't make big mistakes. And I've done that in the past. And it's the same mistake, again, I always make. I find a range I like and it's working, so I scale into it. And then there's a shock, and it goes from being profitable to being negative significantly in a beat. And, you know, after playing around with that for the last 18 months, I just decided I don't want to do it. There's no good way to manage that. Just size down. I may find something down the road, but I haven't. Okay, warm up the brain and the body. No large losers. Again, that's the thing I mentioned. You know, large wins, small loss, or break even. You know, that's the other half of that. There's no other, if you have large losses, you're not doing right, and you got to define what that means. And in my model right now, for this particular thing, it's 500, but I'm trying to get it lower. I'd love to be trading 10K a day with like a $200 loss objective. That's really aggressive. Probably not going to happen, but, you know, that's no counter trends, no open 5 fades. I told you that's my #1 error. And at the open, no counter trend, right? And then first hour high and low better, because there I have more information. That's what that means. And then, you know, winner to winners, no losers to losers. My best play is HMOMO with order flow. It always is. That's your best play too. You've all found that. On those crazy wild days, you know, you just get in and you just get your stop in and just let it rip, you know. And then here's the preamble I made. I told you guys I was making a preamble. I found one I liked. And this is just a phrase to say to yourself right before every trade. Okay, and this is where I'm going to wrap this up if there's no other questions after this final statement. There's something that they say in a lot of different places. I'm sure you've heard it, but insanity is the definition of doing the same thing over and over again, but expecting a different result. I'm sure you've heard that. That's insanity by definition, right? So my preamble is, if I'm doing anything that remotely looks like that remotely resembles insanity. I mean, am I going in short again when I've just had 3 short losers? Okay, I'm probably not going to, that's what I'm talking about. So that's my preamble right before a trade. I just look at it and say, okay, what's the trade? Okay, Jeff's going to just make something up. I'm going to buy the gold range thinking we're going back up to the high and break out. That's the trade setup, good or bad, whatever. And so I'm going to get into this trade here, that. And as I do that, I'm going to say to myself that, have I tried this already? Is this not working? What happened back here when I tried earlier? A little recency bias, but I need to consider it. Okay, well, my thinking was right, but I had too much size. Bingo. So I just told myself what not to do. If I'm going to take the trade, don't take it with too much size and let it rip. Boom, done, that's it. So that is the purpose of a preamble. You may or may not find that useful. I have found it useful many, many times, and I change it depending on what I'm doing. Right now, for my objective, which is this, I want to have minimum days be 1 to 2K. I mean, otherwise it's just not going to be reasonable to expect an average of 10K. Because if I have a low day be 1, I'm going to have some 20, 30K winter days to account for that, right? To make the average. So one of the ways that I do that is I look at, I want to really be consistent over the next 15 days at 1 to 2K. And again, that's an average. That doesn't mean there'll be no losing days, but a losing day shouldn't take away from that average. Here's the business plan again. So what can a losing day be if my average is 2K a day? Well, it certainly shouldn't be more than 2K or maybe 3K, a day and a half, because you're just going to get too upside down. And if you think about it, well, that automatically blows the loss limit for 150. So I can't let it get that far. So I've got to keep it tighter. And I told you, I'm trying to keep it to 200 bucks, 500 bucks, somewhere in there. And yeah, that's hard. Okay. Yes, hope is missing. Hope, yeah, no, hope and pray are not stock symbols. That's another Jeffism. HOPE and PRAY are not stock symbols. Okay. But okay is a Jeffism. All right, let's see. If you have questions, ask them. This is a long one again. We're still doing okay on recording space, but let's see, this is 2.5 hours. This is just too long for me. What ends up happening is I'm so tired I can't do anything the rest of the day. That's why, continually teaching is really hard. It saps your energy. Either that or you're a crappy teacher and you don't have any energy. All right, guys, last chance to ask a question. Otherwise, this webinar is over. Going once, going twice. Thank you, guys. Glad you liked it. I don't know if it's God stuff, but it's certainly good stuff. I'd like to think it's God stuff sometimes, but that would be dangerous thinking, wouldn't it? Okay, guys, I'll talk to you later.